list should come up for you.
All right, thanks a lot. It is on our screen. Thanks for that, Ekta. Well, JSPL is the other stock that I'm looking at this morning. Kotak has upgraded JSPL and they say it's their top pick in the sector. The stock is up almost 2.5% right now. They've raised their target price to 740, which is a big upside to the current market price. And they say the next 12 months is a transformational period for the company, where there are various projects that are coming in for commissioning in the next 12 months, and their capacity would increase by 65% in the next 2 phases. Also, all right, we will, of course, continue talking about GSPL in a bit. But here you go. Here's the first take on the index, looking pretty good. And we are virtually at all-time highs now. I mean, just about 20-30 points away from there. The first tick is in the green, well, within kissing distance of that all-time high. So we'll keep our eyes peeled on that. Well, the mid-cap index
Sonia,
is the
by the
one
way, we got to within 6 points of it
yeah.
at the day's high.
I think it's the mid-cap index where the party continues, right? We just keep quibbling about the nifty, but the mid-cap index is up almost about 0.5%. Very good opening, really, for the markets. Dr. Reddy's is your big mover, up about 1.5%. Ekta was telling us about the positive news for 2 of their facilities. So that's the big mover on the index. Apollo Hospitals not too far behind. Metals have come back in a big way in the last many days. So Tata Steel is up about 0.7%. JSW Steel is up 0.4%, and JSPL, you just heard about the Kotak upgrade over there. Nifty, by the way, now just 26 points away from that all-time high, resuming that all-time high rather. So we're going to keep our eyes peeled for that. The advance decline ratio is well in favor of the advances, almost 1,800 stocks there. On the downside, what's dragging is Hero MotoCorp. There is that downgrade that has come in, from Axis Securities. You just heard from them a while back. Apart from that, the weakness in the monsoons is something that will impact some of these rural stocks, so keep an eye out there. HUL is also dragging a bit. Reliance is in the back foot this morning. Bharti Airtel as well, not doing too much. IndusInd Bank, NTPC, a couple of other stocks that are in the red. But give and take everything, this is a good opening. This market is all set to hit those new highs. Whether we achieve them today, in the next 1 hour, 2 hours, it doesn't really matter because we are virtually at those levels now.
I think sometimes, when you stop looking at the board at that countdown timer, that's when things happen. So who knows? But anyway, look at the strength of the mid-cap market. We are up and away. JSPL, the stock that, Sonia was just talking about on the back of the upgrade, straight away 4.5% higher. Shriram Finance, a bunch of these NBFCs, you've heard a lot of upgrades on the NBFC pack today. Shriram Finance is up and about. I think there was supposed to be a block as well. Nimesh was alerting us about that. So we'll keep an eye out on it. 5-Star Finance, where upgrades have come in. Kalyan Jewellers, there were blocks on Friday where 6% equity moved around. And there's a further follow-on action on the stock today. It was up 10% on Friday, another 4.5% today. Mishra Dhatu, the defense theme is well and truly active, so 5% up on this one. Axis Case news, they have, I think, completed a small acquisition, so 5% on that stock. So it's really, by the way, 18,872. We need to get the timer back on, right? That board, 873, 871. It's practically there. 14 points, 15 points. Mid-cap market is saying, hey, you know what? We are having a big party and a big breakout of our own, so not really waiting. On the mid-cap screen, more names like NMDC Steel, Mannapuram, up and about. So it's looking good. In terms of the watch list, stocks that are on the back of news flow, moving on the back of news flow, Mannapuram 2.5% higher, HAL is 2% higher. Some of these defense names like Paras Defense, MTAR, also fairly active as we start the day off. So 74, 73, 74, Prashant now. It's teasing, just a couple of points away.
Oh yeah, it's just a couple of points away.
76.
And it'll come. A matter of time. Now, just a couple of other names where we can see where we are seeing some action. HAL, for example, is there right at the top of the list, gaining list. We put out news flow there as well. So stocks up about 2.25%, but huge volumes in it. There is JSPL, which is up about 4%. Of course, the upgrade, as Sonia was highlighting. Kalyan Jewellers is another one. I think last week was a good one for Kalyan. And that is up 4%, 136. Shriram Finance, we highlighted that. Mannapuram is up about 2%, 128. Skipper is another one which is coming up with a 14% gain. And these are the kind of names which pop out of nowhere in the mid-cap broader market space, but huge volumes on Skipper for this time of the day, as you can see. Now there is 5-Star, which is the Chennai-based NBFC, relatively newer listing in the market, 5% higher on that one, 631. There is Borosil Renewables, which is coming up with a 7% gain. So some new names, 570. There is Texmaco Rail, which is up 3%, and so on and so forth. So this is, the broader market list, which is looking very, very solid right now. On the downside, DMart is down 1%. It's coming up with volumes, so just highlighting it. Tata Communications is down about 1.5%, 1604. And I think we've got Varun Beverages and PVR, which are down 1.6%. Signed is another one, which is seeing some profit booking as well. So just kind of, middling kind of activity on the downside, but enough and more on the upside. So
yeah, I just want to mention that this market is so secular in nature, right? I mean, if you look at the list of gainers or the list of stocks at 52-week highs from the large caps, it's across the board. So something like a Titan is sitting at a fresh 52-week high, Dr. Reddy's is at a fresh 52-week high, ABB India, Cummins, PI Industries, Britannia, Chola Finance. So the list is pretty long and it's spread out. So this is a market that is starting to sort of spread out, not just to the frontliners, the mid caps, but across sectors as well. I guess, that basket buying, I think Nimesh was mentioning that on Friday in our Closing Bell show about the basket buying from FIs across segments, and that's something that's perhaps playing out now.
Well, it is buying, basket or otherwise, and it is showing, isn't it? I mean, price is looking super, super strong. Price action. Gautam Trivedi is now joining us. He's co-founder and managing partner at Napian Capital. Gautam, good to have you with us here. I reckon it's possible that you join us when we'll have to announce and the Nifty hits a new high. So just 10 points or 15 points away. How are you feeling, Gautam, about the market and your thoughts? I mean, very strong rally, especially in mid caps and small caps.
Yeah, I think you're absolutely right. This is not just an India phenomenon. It's actually a global phenomenon. If you look at the Nikkei, the DAX, both at lifetime highs, the CAC in France is also near a lifetime high. So I think you're seeing this as a global event. It's not happening and limited only to India. From an FPI perspective, should I say, we're the fourth largest recipient of foreign flows year to date. So if you look at China, northbound flows, they've been $28 billion. Korea has been over $13 billion. Taiwan's $9 billion. And we're now about just under $6 billion, I believe, in year-to-date FI flows. So I think, having said that, I think the market still has legs to go. And the reason I say that is the fact that when the market hit a premium, and I'm talking of MSCI India over MSCI Asia ex Japan, hit a premium of 96% is when actually the market actually took a huge tumble late last year. And that premium contracted to as low as 48% by mid-March, early April. So that's when the foreigners actually came back. And I believe that the premium now is roughly about 57, 58%. So I think there certainly is more foreign money that India can certainly absorb across large, mid, and small caps.
Gautam, hi, good morning. By the way, I just wanted to make one mention on the market. Although we are, almost approaching all-time highs, the Bank Nifty today is not really performing as much. It's absolutely flat at the moment. And there are some banks like IndusInd Bank, ICICI Bank, SBI that are actually dragging the markets and preventing the Nifty from getting to an all-time high. So just wanted to mention that point as well. Nothing alarming, but just one data point. Gautam, where do you see market leadership now? Because, this very interesting market. Sectors that haven't performed for years are coming back in a big way, whether it's autos, real estate, defense. Of course, defense now, it's been 1.5 years of a rally. But where do you see the next leaders come from?
The question really is this rally too narrow for comfort? And frankly, if you look at the Nifty 50, 10 stocks, the top 10 stocks have basically accounted for more than 50% of the gain since mid-March when we hit the low of the year. Similarly, if you look at the S&P 500, literally 8 tech stocks that account now for 30% of the market cap of the S&P 500. And again, there it's been a pretty narrow rally. Question really is this going to now expand to a broader rally? And I hope it does, because as you said, you named a few sectors that we've seen rally, which hadn't really participated until recently. I think there is scope even now for maybe real estate still on, cement, some degree of cap goods still to go, because the bulk of the capex of the government in the budget which itself is a record number, will start to kick in given the fact that we have a big election next year. And of course, a whole bunch of state elections later this year. So I think these are the three sectors that I would focus on as hopefully continuing to participate in the ongoing rally.
Gautam, hi. Good morning. Surabhi here.
Hi.
You know, I'm a little surprised that you haven't found the rally broad enough, because whether we're looking at the month of June, and I was looking at data. So in June, the micro-cap index is up 7.5%. This year, calendar year 23, that index, the micro-cap index is up some 17%. Nifty's up 4-5%. In June, the Nifty's up 2%. And actually, banks have been underperforming, right? You made the point earlier about foreign capital, and that's the narrative, that we should be getting more foreign capital. But then why are the big boys really underperforming, so to speak? And a lot of this money is chasing actually mid-caps, small caps, and even micro-caps. Do you see this continuing to be the defining trend over the next few months, or do you see that changing?
You know, Surabhi, that's a good point. But the fact is, typically foreign investors are not that kicked about small and micro caps. So a lot of that definitely is retail or HNI led in India. You don't see too much foreign participation below maybe $1.5 to $2 billion in terms of market cap. So I think the FII money is clearly coming into the larger caps. If you look at March, April, and May, the numbers that I have with me, over $3 billion has come into financials, and that's partly been funded by about $1.5 billion of selling in IT, which I think is an area to look at as well, because some of these stocks have had a massive correction. I mean, Infosys as an example, we do own the stock in our portfolio, but that stock's down more than 15%, and it's been the worst performer in the IT pack, at least among the large cap IT stocks. So I think the rally will get broader. I'm confident of that happening. It's just that I think foreigners typically don't participate in small and micro cap.
Yeah, no, got that point. Gautam, so, you know, at a general broad level, Gautam, what are you doing? Are you taking some profits off the table? Or are you investing more? Are you staying put? What are you doing?
No, we're definitely not taking money off the table at this point of time. I think we are still out there looking for stocks that could potentially participate in the rally or have been laggards and could join the rally. I just got back from the US where I spent over a month meeting a whole bunch of fund managers and asset allocators. And believe it or not, the interest in two countries, which was the highest, one was, of course, Japan, which is the Nikkei is now at a 33-year high, and the second being India, which probably today will hit a new lifetime high. But not even 9 out of 10, but 10 out of 10 investors said they've been burnt in China and are super excited about putting incrementally more money into India. So I think if that is indeed the mood, and of course, a lot of these allocators made visits to India in the first quarter of this calendar year. So I think hopefully a lot of that translates into money coming into GEM funds, India offshore funds, and that money invariably will end up finding its way into the Indian market. So if that happens, I think this rally will continue. And at this point of time, we're certainly not in a mood to book any major profits.
Okay. The space to be in lately has been metals, right? I mean, I just pull up the chart of JSPL. We were telling you about that earlier as to how Kotak has upgraded JSPL. And Gautam, the Kotak report makes this point that in the next 12 months, there are several projects that are coming up for commissioning for JSPL, and their capacity is expected to increase by about 65 to 70% over the next 2 phases. Is this a time to be betting on the metal names? If yes, is it the ferrous space you like, non-ferrous? Which are the pockets that look good from a long-term horizon?
Yeah, we really don't invest in cyclicals, but my personal view on metals is that a lot of that China reopening ended up being a bit of a, hasn't really played out as well as people expected it to. And I'm not sure if the rally in metal stocks is really going to necessarily sustain. So that's my personal view on metals.
Okay, got that. Gautam, great chatting with you as always. Thank you for joining in. Didn't get the all-time high, but so what? I mean, I think it's a market where the mood is pretty optimistic, and I guess that is really important from investors' perspective. By the way, the reason we're not getting to that all-time high, it is banks, like Sonia pointed out, but today you don't have Reliance helping. You don't have something like a HUL helping. So you've got a little bit of a profit taking that's quite evident on the other side of the screen. The life insurers, remember the huge rally that we had on Friday? Life insurers are cooling off a little bit. The red side has a fair amount on the other end, countering for the greens, and therefore you're pretty much stuck in that range. Volatility 10, 15, 20 points here and there, but yes, that momentum that the bulls would have hoped for, that big push through to the all-time highs, that's missing right now. Maybe it picks up in the next half hour. Who knows? It's a long day ahead. But let's keep the conversations flowing. Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company, is with us. Nilesh, good morning. Great to have you on the show as always. So I want to start not with when will the all-time high come or not, but I want to ask you, when you speak to all of your fund managers, do they still find a lot of comfort in this market? Are they still enthused with a lot of ideas, stocks available at least reasonable prices, if not cheap prices? Or is stock selection getting difficult after what has been a breathtaking rally so far this financial year?
So to some extent, my fund manager's job has become easier as investors have started behaving very, very maturedly. When markets are cheap, let's say 17,500 and below, we get SIP plus subscription. When markets are expensive, let's say 18,000 and above, we get SIP minus redemption. And last month, flows did come down, keeping in mind that behavior. But notwithstanding what happens on the liability side, we have to focus on asset side. And over there, yes, it is a bit difficult to find value in this market. It's a fairly priced market, neutral market. And one will have to be careful in picking up stocks at this point of time. By and large, we are long-term investor. Our portfolio turnover is about 10-15% a year. So we are not really looking to buy things with 1 year or 2 year view. We are looking to buy things with a longer term view.
Nilesh, hi, good morning. It's a great time to be chatting with you since the markets are at all-time highs. The mood in general is good. But we were having this discussion on our show Editors Roundtable, and almost every expert agreed to the fact that there is no euphoria in the market just yet, right? I mean, plenty of stocks are still well off their 52-week highs. Do you feel the same, that although the markets are at all-time highs, this euphoria from retail, this, everybody jumping in because of the FOMO factor has not culminated just yet? And if yes, could that mean that there is perhaps more upside to the market despite all the triggers being priced in?
So, Sonia, this might be a little bit of bragging, but take this in a lighter way. The euphoria about India today is now with the FPIs. They were on exodus mood between October 21 to June 22, selling about $35 billion. And now they are buying back the same stocks at a higher prices. So undoubtedly there is euphoria about India, but that's more on the foreign portfolio investors than local investors. The local investors have been buying equity on a regular basis. By and large, they have been coming via mutual funds, right, rather than going directly into the market. By and large, they are focused on quality. So overall, retail investors have matured a lot. This is not to say that everything is hunky-dory in India. Even today, 89% of retail investors who are going to trading in FNO end up on the losing side. So there are two India coexisting, one matured, experienced investors participating in long-term story, the other which is trying to trade in the market, gaining the experience that trading is generally injurious to your financial health.
Nilesh, I think you and I have spoken about, I think over the last 15, 17 years, various points we've spoken about, the fact that India's time has come, right? But this seems like one of those, and you're absolutely right. You look after publication, in many ways the stars seem to be kind of aligning. One new factor, which I think was not present in the earlier occasions, was the absolute, maybe a strong word, but disgust investors are expressing towards the largest EM market, which is China, right? So that means that they're looking for opportunities elsewhere, and that is a really big one. It could be a big structural factor if that stays that way. We have Prashant Khemka also joining us, founder at White Oak Capital. Prashant, great to have you with us here. Thank you very much for your time. What are you guys doing at White Oak with where the market is now, and how are you thinking about it, more importantly, directionally from here?
No, certainly, very apt point that you noted about China. I think the leadership there for geopolitical priorities has what that has meant is the economic policies have taken a back seat. And that is playing to India's advantage when India is on the front foot in terms of its economic policies. So these confluence of events that have come together, which includes, the fact that COVID and Russia-Ukraine is now business as usual. We are end of the global rate cycle, and without a massive fall-off in economic activity in the world's largest economy that was anticipated, and this largest EM market, as you pointed out, competitively falling behind India, I would say in economic terms, has meant a big boost to economic activity, particularly in the manufacturing sector, and resulted in uplift in both the corporate earnings expectation as well as the multiple for Indian equities compared to the EM equity multiples around the world. So we are in our EM portfolio, for example, India is the largest position at this time, ahead of even China. And within India portfolios, obviously, we are fully invested as always, with largest exposure in sectors like financials and consumption.
Prashant, in your now and in your earlier avatar as a sort of global manager, EM manager, I was reading an article in the Financial Times, which talked about how investors are asking for ex-China EM structures. This is something we had highlighted last year as well, but that now seems to be happening. I mean, just like, this Asia ex-Japan came into being some 30 years ago, now it is ex-Japan, ex-China. I don't know if that, if you're hearing anything or is the media making too much of it? Just wanted your thoughts, Prashant.
No, very true. Now, we have to be careful because these things come and go. But yes, over the last 12 to 15 months in particular, the demand for China, EM ex-China or even Asia ex-China has certainly surged. We've had several inquiries, several requests from institutional investors in Europe and elsewhere, whether we can consider having a tailor-made portfolio without China. I think this is the peak bipolarity, if you will, that I have seen in my 25 years investing career globally, where the negativity on China is at its highest and the positive sentiment towards India is at the same time very high. So this relative positive attitude towards India compared to China, I would say, is at its highest. And it manifests itself in several forms. One is this ex-China demand, but also the number of clients that we interact with globally who are for the first time looking at India as a separate standalone allocation. So many of the US investors historically have had EM allocation and a China standalone allocation. But today, many of those clients are looking at India as a standalone allocation and are at advanced stages of discussions, not just with ourselves, but in the industry with many managers, and several of them moving their allocation from China to India. So both these are at their peak at this time.
Absolutely, Prashant. I think, this is a sense we've been picking up from a whole range of market experts, Indian and foreign overseas. I think the consensus is that come, late summer or fall, perhaps we should see, a big pickup in FPI flow. So let's watch for that. But in the meantime, Prashant, let me draw your attention to the micros, really. And you're someone who's seen so many different market cycles, right? So this mid-cap rally that started, it's only about 2.5, 3 months old. But already, if you look at the calendar year, then the micro-cap index is up 16%. The mid-cap index up, 13, 14%. Nifty is only up 5% or 4.5%, less than that. Now, my question is that, are you already noticing any pockets of, small excesses building up? which could be red flags, which investors should really watch out for? Or do you think this is actually a very, very nascent, longer-term bull market, mid-cap bull market, and we should be prepared to see euphoria, prepared to see very, very high multiples as well? How do we approach this side of the market?
Certainly. I think we always have to be watchful, but this time it doesn't seem like it is out of place compared to where the rest of the market is. Remember, prior 12 months, if you see, so as you rightly pointed out, this uplift in mid and small and micro caps is largely 2-3 months old. If you look at last year, 22, these segments had underperformed large caps. Not by a huge lot, but they had underperformed nonetheless. So there's been some time correction in this area. And even if you look at longer term, especially over last 5-year periods, it's not that these guys have, the smaller or mid caps have substantially outperformed the large caps. So I'm not saying these guys are undervalued particularly and should, room to have a big rally because of valuation reasons. But yes, the momentum may build up further. I don't think it's reached euphoric levels at this time. There are obviously certain political events in India, particularly the central election next year. And if that goes in line with market expectations, then it is possible post that, if this momentum continues post that, that might result in some euphoria.
Okay, so there's no euphoria yet in the market. Got that. Now we are virtually about 40 points away from all-time high. So let me try and just wrap up with Nilesh Shah and his comments. Nilesh, what do retail investors do now? Investors who have perhaps not jumped onto this rally as early as they would have, thought to. What is the best way to approach the market now? Do you load on to some of the sectors that have done well up until now? Do you find new leaders in this market? What's the best approach?
Sonia, I'll simply say, do your SIP in mutual fund and participate in India growth story. It's never too late to start your journey in SIP in mutual funds.
Okay. Go ahead. Go ahead.
Nilesh, give us some more insights. Some ideas. Maybe I know we can never discuss stocks with you, but as a house, Kotak has been extremely optimistic on the manufacturing space. I think you guys like cement a lot, for instance. But maybe some more specifics where you still think valuations are reasonable and one can build that multi-year portfolio.
So clearly, this is a market which is fairly priced. There will be volatility in the days to come, thanks to various events from Fed pivot to central election. My recommendation to investor is, just build a diversified portfolio. If you are beginning, then a large cap portfolio is better. If you are a veteran, then dabble in small and mid cap also. Yeah. But maintain a disciplined asset allocation and regular investing. Every correction is a great opportunity to enter Indian growth story.
Okay, got that. Prashant Khemka, final question to you. Markets at all-time highs. What do retail investors do? And what's the best strategy to adopt for the next 12 to 18 months?
As always, I would say stay fully invested. Figure out for yourself what's a comfortable level. That may be different for every individual, but don't try and time the market come in and out, because those are, in the final reckoning, the people who are left behind, who try and come in and out. I think, as Nilesh Bhai at some point in time has mentioned, the returns that investors get is a function of time in the market rather than timing the market. That's very, very aptly put. And if you think you are expert investor yourself in stock picking, indulge in that and enjoy that. But otherwise, the right advice, as Nilesh Bhai gave, invest in a good mutual fund, ideally through SIP, so that you get time diversification as well. But regardless of how you invest, stay fully invested at all times would be what my suggestion would be.
Okay, stay fully invested. That's some sane advice coming through. When markets are at all-time highs, people start to get a bit jittery. But I guess the optimism from both of you is flowing through. And thanks a lot for joining in, Prashant Khemka, Nilesh Shah. Appreciate your thoughts here on CNBC TV18. Well, that's the word coming in on the market. Prashant Khemka saying India is their largest position in the emerging market portfolio. They're fully invested in India right now. and several investors are moving their allocations out of China and into India. Let's sip into a quick break. On the other side of the break, we will be joined by George Alexander Muthoot, who's the Managing Director at Muthoot Finance, to discuss the company's business outlook. Later, we'll also connect with Gangadi Madhukar Reddy, who's the MD and CEO at MedPlus Health Services, to discuss outlook on their business going forward.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms.
Welcome back. With the markets at all-time highs, there are plenty of sectors that are at all-time highs as well, and the sectors that are doing well. Muthoot Finance, actually the first corporate on our radar today. The company's Q4 performance, especially in the gold business, was very strong. The assets under management have risen by 9% year-on-year, while the loan growth saw a nearly 10% rise sequentially. George Alexander Muthoot, who's the Managing Director at Muthoot Finance, joins us now to talk more about that. George, thanks a lot for joining in. Always great speaking with you here on CNBC TV18. I wanted to understand, the last time, of course, you told us that your core focus will continue to be in the gold market. But over there as well, competition has intensified. There is a little bit of pressure that you have been facing in the recent past. So I just want to understand, how is the competitive landscape now in the gold loan segment? And what would this mean in terms of your, growth, the AUMs, etc.? Will it continue to be in double digits in FY24? And what's the outlook?
Good morning. Thank you. And the outlook for gold loan is quite good. We had said that we would be growing well this year. Last quarter has been good, and this quarter is also equally good. We are happy that the sector is growing. Gold loan business for Muthoot is also growing. Last time we had been saying that for Muthoot Finance, the primary focus is always gold loan, and it will continue to be a focus going forward also. So we had last year, in the last conversations, we had suggested, or we had indicated, a growth of 15% in the gold loan AUM. I think we should hold by that, because as the trend in the last quarter and this quarter we see is that we may be able to, or we will be quite comfortably be able to do the 15% growth in the gold loan AUM this year.
Mr. Muthoot,
next, you also wanted to know about the competitive landscape. Yes, quite a few players have actually started entering into this market. The few NBFCs have come into the market, and some of them have started giving gold loan also. But then, from what previous experience or experience I have with others also, other NBFCs also joining the gold loan, I feel that after a while, fatigue will start coming in, and these NBFCs will move their focus from gold loan to something else. That's what I have seen earlier. As regards to the banks, especially the PSU banks, and all the banks which had quite a lot of, bad loans, sticky loans in the big corporate sector, have now turned their attention to gold loan. And the last 3-4 quarters, most of them have been doing gold loan. Of course, they have a big branch network.
Right.
The banks have about 60,000 plus branches all over India, and quite a few of them are giving gold loans also. But then, by the banks giving the gold loans, the market is deepening. More and more customers are getting into the gold loan bandwagon. That means they are getting more comfortable to do gold loans. Gold loan is actually a very smart way of taking a loan, and people are realizing that. The market is also increasing. So
Absolutely.
although competition is coming, we, as from our side, have not seen any dip in our growth. And as I said earlier, we will be able to do the 15% plus growth in the gold loan sector this year.
All right, Mr. Muthu, that's a very comprehensive response. Actually, there was a bit of a dip earlier, but the dip was reversed. Fourth quarter was very good. And that 15% growth, I mean, we spoke with you about a month ago, and that 15% growth is reassuring to the market. Investors have taken note. Your stock started to repair some of the damage it has seen. Actually, NBFCs and banks entering the space is, in a way, yesterday's story, right? The new news story is competitive intensity coming down, what you've been telling us in the last 2 or 3 interactions that we've had with you. Is that correct, sir?
Yes, I stand by it because the competitive intensity is coming down because the NBFCs and banks are also looking elsewhere for their growth, not the gold loan. It was good earlier, but now they are also realizing that it is not that easy also. It's a very quite a few process-oriented and operationally challenging business also. So I think after a while, they will reduce their focus. But I'm sure even with they're continuing to do this, we should continue to grow our book.
Okay. So, Mr. Muthoot, I guess you've made it very clear you're expecting 15% growth in your gold loan business this year, and you're not too perturbed with this competitive intensity. So then let's talk about some of the other business internals. We seem to be in a long pause kind of a situation with respect to the central bank, though the RBI keeps saying this is just a pause, it's not a pivot. But what is your outlook on the cost of funding? In the fourth quarter, margins tapered off a little bit. I mean, you were down to just below, I think, 12%. What is the outlook?
I think the cost of funding, the cost of incremental borrowing, I think it is stabilizing. It is not going up any further. In the last 1 year, it has gone up by about 100 basis points. But the gold loan being such retail loans, we were able to maybe pass it on to our borrowers, because borrowers also, when they borrow from elsewhere, whether it is a gold loan or any other loan, they have started paying higher rates. So when they have started paying higher rates in other loans, they wouldn't mind paying a higher rate in gold loans. So we have been able to pass on that. Coming to our margins, our spread, we would like to keep it between 10 and 11. I think going forward also, we should be able to maintain the spread of 10 to 11% on our gold loan.
Okay, that's on the gold loan side. We've talked about that at length. Tell us a little bit about the non-gold loan portfolio as well. Mr. Muthoot, what kind of growth are you seeing there? And in terms of asset quality too, how is that shaping up for FY24?
Yeah, as far as the other loan books is concerned, we had gone into the affordable housing sector, and we also had a pause in the last 2 years because we were not growing that book well. But now that we have a new CEO also coming in the last 4 months, we have seen growth in the last quarter. We have seen good growth in the affordable sector, affordable home loan sector, and we should see good growth going forward also. We expect the affordable housing finance portfolio is about 1,200, 1,300 today. We should see it reaching 1,800, 1,900 by the end of the year. The other non-gold loan portfolios were the salaried personal loan, which we started. We have about 600 crores portfolio there. We should see it reaching to about 1,000 crores by the end of the year. The microfinance, which is done by our subsidiary, Wellstar, the microfinance sector has been doing well. Among the other peers in the market, the microfinance sector of Muthoot is also growing well. They have about 6,000 crores of portfolio, and surely by end of the year, they should also reach about 8,000 to 8,500 crores. So the other portfolios are also growing. We recently started a very fast personal loan to our gold loan customers also, very small portfolio. But then that is also being offered to our gold loan customers who have a good track record and who are willing to pay the EMIs. Today, the gold loan, what we give is all bullet loans. So those who are interested, they can take the EMI loan as a quick personal loan.
Got it, Mr. Muthoot. It's a pleasure as always, sir. Thank you very much for joining us and running us through all of that detail. Directionally, looking good. And that's what markets want to hear. Thank you very much for your time here on CNBC TV18. Well, let's talk about another interesting company. MedPlus Health Services is the company on our radar. The company is on an expansion spree in FY23. They added a total of 1,074 stores. With respect to online stores, companies say that they continue to expand coverage of PIN codes for orders online. The stock's done well. I mean, late last year, stock was at about 600. It's come up to 800 now. Gangadi Madhukar Reddy is Managing Director and CEO at MedPlus Health Services, and he's joining us right now to discuss how business is doing. Mr. Reddy, good to have you with us here. Good morning. Thanks very much. Prashant this side. I want to just start with, we have your sort of FY24 guidance numbers, revenue guidance numbers. I think you were guiding for flat margins, 20-25% growth in top line and flat margins for the full year in FY24. But with just 15 days for the first quarter left, could you tell us how is discounting looking like? I mean, is the pace of discounting coming off? I'm talking about online. What's the picture, if you can tell us?
Yeah, one would expect that with the problems being faced by a bunch of the online guys, that the discounts would actually come down. But unfortunately, it is not really true. We have at least one major competitor who is continuing to advertise the big discounts and all. So while, one of them, Pharmacy, has come off a little bit, I don't think the intensity has really come down that much. So that's all I can say. I think all the journalists have been talking about the funding issues of most of these companies and the fact that, all of them have been talking about reducing the discounts. But in reality, that has not really happened, Prashant.
So what does it mean for MedPlus, sir? I mean, in that scenario, I mean, one is backed off. You're saying one competitor still persists. So where are you at in terms of discounting and sort of, being competitive, really?
No, for us, we have always been the price leaders out there. Most of the online people have actually given discounts of 25% or so on the first 3 purchases or on some special occasions. And then they try to actually drop the discount to 15 or 16, which is a viable number for most of them. So for us, though, we have always maintained the 20% discount on all bills above 1,000 and 10% below 1,000. And that's continued. So as far as a customer is concerned, if we were to strictly look at it, after the first 3 purchases in any online platform, we would be the most competitive ones. But most people, what they end up doing is after they do the first 3 or first 2 purchases on their own phone, they end up, going to their spouses or children or someone else's phone. And so they exhaust that full thing in their family before they actually start thinking about someone else. And unfortunately, in the past, what has happened is by the time a person exhausts this, some other competitor comes in and says, okay, I also want to give the 25% discount. Sure. So that thing has been kind of perennial, honestly.
So, Mr. Reddy, I think the reason why Prashant has asked you about this discounting and how the intensity has gone up, etc., is because if you look at your own business as well, right? I mean, your margins for the last 8 to 10 quarters have been in that exact same range of about 6 to at best 7%. It hasn't gone beyond that. And now with this discounting going up, with this intensity, competitive intensity rising, the fear is that perhaps margins could continue to either be in that range or maybe even fall further. Is that a legitimate concern? And if not, what would the margin band look like, say, in the next 1 to 2 years?
Okay. So our thing is a function of the rapid growth which we have. We have been adding at the rate of 1,000 stores. We added 1,074 stores last year on a base of roughly around 2,700 stores. So roughly around 35% odd stores, right? So given that all these stores will take a little while to actually mature, that's been a drag on us. And given that we had actually added 750 even the year before, and that was also a 30-35% growth on the base, you actually did not see any improvement in the margins out there over the last 2 years. But and again, as an extension of that, the fact that 50% of our stores are under 2 years, and post 2 years is when we actually make the actual EBITDA. We are going to be seeing this for a while. This year also, we are looking to actually add anywhere between 800 to 1,000 stores. And so you can expect it to be a flattish kind of thing as far as the normal business goes. But, as we continue to add sales on top of the 4,500 crores, I do not expect that our other costs, which would be, let's say, we would start getting some benefits of scale. My warehousing costs will not go up in the same level, and neither will my corporate costs. So we will see some benefit out there as we go forward. But the drag because of my new stores is going to be there. While online and the other discounting has affected us a little bit, it's not done so majorly because, end of the day, the complete online thing is actually less than 2 or 3% of the overall country at this point of time. So honestly, while it does take off a little bit of shine off our SSG, it is not a major factor.
Okay, Mr. Reddy, just I've been hearing you make a lot of very interesting points. Just to wrap it up first before I move on to the question, you're saying expect flattish trends on margins this year because of the, this huge impetus of new store opening. So we should expect margins to average out around the 6% mark for FY24?
Maybe slightly better, you could say, mainly because we will definitely see some scale benefits.
Okay.
But yeah, that would be the general trend.
Maybe just slightly northwards of 6%. Okay. So just a question on how you're funding this very robust store expansion. You had pretty solid operating cash flows in the fourth quarter. So what is the total quantum of cash on the books right now? What's the capex plan? Would you be borrowing? Just a debt equity profile as well, if we can get that.
Sure. See, we raised 600 crores in the IPO, and that is primarily to grow stores. It costs us around 30 lakhs a store, so which would basically mean, the last 1,074 stores would have basically taken us around 300 crores odd. So we have 285 crores in the bank. There is no debt at all in the company. This is more than enough for us to actually grow the current lot of stores. And by the time we are done with this, our internal accruals and all should basically kick in for us to start growing at the rate of 1,000 stores a year. Even if it is not, we would not mind borrowing a little bit on the working capital side. My 30 lakhs per store cost is mainly working capital. 20 lakhs of it goes towards inventory, 2 to 3 lakhs goes towards the rental advance, and 7 to 8 lakhs only goes towards the actual build out. So which means the 10 lakhs portion, which is the actual capex, that we have more than enough, accruals to take care of a 1,000 store expansion. If there's a slight shortfall in the working capital, we'll borrow it, even that we don't have any debt at all right now.
Mr. Reddy, just one final question. This private label sales are currently around 14% of your sales. How much do you think it could contribute to your overall business, say 2 to 3 years down the line?
Okay, there's two components to it. One is 8%, which is medicines, which are actually the big margin drivers for us. The other is, surgical and rehabilitation kits and all, and the hair care, skin care kind of stuff. Those we actually expect to go really rapidly. That 5 or 6% portion, which is non-medicine, I can fully see it going to 10 or 12% or so as we go forward. But the medicines, though, will probably just move a little bit, probably go from 8 to 9 or 10% at the most.
All right, Mr. Reddy, we'll leave it there, sir. Out of time, but good conversation as always. Good luck, sir, and hope to speak with you again soon. Thanks indeed. Well, the market is in the red, 1.5 odd point. And, the 18,825 is where we are at. It's been a steady, it's just been, 45 minutes of trade, but it's all been slowly coming off on the Nifty. Let's just look at the Nifty Bank as well. Maybe take a look at where we are at. We are in the red on the Nifty Bank as well. A slow drop-off, gentle drop-off. The mid-cap and small-cap indices, I reckon, are doing much better because the market breadth is looking up about 0.6% on the mid-cap index. And I think we've got the small-cap index up 0.75%. And it's pretty solid market breadth, with which is about 2.5:1. Stocks gaining to losing ratio. We'll take a quick break here. Mitesh will be with us with what to do in terms of the index and specific stocks. And of course, our research team comes back and puts the spotlight on more stocks in a bit as well. Stay with us.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
year since the launch of Mumbai Metro 2A and Mumbai Metro 7. And in this year, over 2.5 crore people have already taken the ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10 or we'll be able to save 10 lives. Once these two metro lines start fully functional, there will be huge relief. Once all these 8 to 10 lines are completed, which are going on right now, we will be creating a carrying capacity in Mumbai more than
Okay, welcome back. The Nifty is down about 6 points or so. 18,820 is where we are at, almost unchanged from last Friday. Mitesh is back with us. Mitesh, hi, good morning. Just a quick view on the index, which has lost a bit of steam, and what would you do now?
Prashant, on the index, I still maintain that outlook that we are not seeing any kind of strong momentum. In fact, it remains a market which is kind of slowing down, and therefore we might not be very inclined to trade on the index. But trading with stocks as proxy on the long side for the index, I think is a good idea. The breadth, the mid-cap index remains stronger, and I think that's where we should focus on. I have a buy on BHL with a stop at 87 for targets of 92. And a buy on Bank of Baroda. Here I would recommend buying with a stop at about 188 for targets of 200.
All right, that's on BHL. It's up, by the way, 2.5% at this point in time. A couple of other stocks that are buzzing at the moment is MRPL, which is up almost 5%, and big movers coming in the broader markets. Mishra Dhatu is now up almost 8%. The new listing Ikeo Lighting is up almost 8% as well. And something like an Aircon is up about 3.5%. So lots moving in the broader markets as well. But let's get some focus in on the commodity space. We have Manisha Gupta joining in now. Manisha, what's the buzz there?
Thank you for that, Sonia. Well, I'm looking at crude oil prices. By the way, all the commodities, industrial commodities, that is, whether it's metals, ferrous and non-ferrous, rubber and crude oil prices have opened slightly on the weaker time in the Asian markets right now. The crude oil prices opened a percentage point down, but clearly we seem to be getting more deeper cuts at this point in time right now. Last week was a good one. You saw 2.5% of gains come in for the crude oil prices. That is because the dollar index was on the weaker side, which still continues to be. We are still trading around that 102 level here. But the pressure comes in because major banks have downgraded China GDP forecast for the rest of this year for the next couple of quarters, and that's weighing onto the markets. Apart from that, it also is about the Iran crude exports, which have hit a new high in 2023. There are reports on how Iran and US, the Western world, that is in conversation. And if that goes through well, then we could be looking at higher continuous exports coming in from Iran as well. The other thing to watch out for in the markets is going to be the money managers, the speculative money, that is. The CFTC data shows that the net long contracts have been cut by 13,000 contracts there, and that seems to be weighing onto the market. The crude oil prices, the reason that we're trading at around $75 a barrel is because there have been a lot of supportive factors as well. One, there is voluntary output cut from the OPEC and allies. There also is China refining, which has surged to second highest on record for the month of May. June is expected to be on the positive side. And then US has reported 7th weekly decline in the number of operating rigs and oil counts there. The US gasoline demand also is expected to be quite strong going forward at 9.24 million barrels per day. This is highest since December 2021. And then Russia Energy Minister said that the realistic price for crude oil is $80 a barrel going forward. Russia clearly has been making those kind of statements for the last couple of weeks there. The markets in the meanwhile will watch out for the Bank of England monetary policy that happens in this week. You also have the US Fed Chair Powell testimony happening in this week. And then apart from that, China is expected to cut its key prime lending rates on Tuesday. So that's yet another 3 important key things that the street is taking cues from.
Okay, Manisha, absolutely. We'll watch out for that. Yes, China has already kicked off some of those rate cuts. Let's see if we get more of that later this week. Now we have, I think, Surabhi joining in because we're looking at a couple of these stocks that are reacting very well to some brokerage notes and commentary. 5-Star Business Finance is one such name. Surabhi is joining in. Surabhi, so many notes today. I forgot which brokerage has a note on this one out, but I remember the commentary was exceptionally positive as one of the fastest growing NBFCs.
That's right. So Nomura has written on 5-Star Finance. They have initiated coverage with a buy rating and a target price of 750. They said that it is a highly profitable and amongst the fastest growing NBFC in a very niche market. They estimate the company to deliver a 30% AUM compounded growth in the next 3 financial years, that is from FY23 to FY26. They think it will be driven by untapped opportunity in the MSME market, especially in the niche small size business loans, which is less than 10 lakh rupees. They see continuous expansion, another growth lever with 50 to 60 new branches every year. So niche expansion in a niche segment and continuous expansion, both these two drivers for 5-Star Business.
All right, thanks a lot for that. So that's on 5-Star Business. But Shriram Finance is the other one that we're looking at this morning. Nimesh is here to give us more details on that. Nimesh, over to you.
Hi, sir. So the stock is buzzing in trade up 5% after a large block. So 2.6% equity has changed hands in Shriram Finance. And I understand from sources that TPG was a seller in today's block. Some large funds were buyers as well. So the disclosures could be important, but looks like TPG has cleaned out, has sold out its entire stake in Shriram Finance today. The other important thing to watch would be going forward. The other large holder is Piramal Enterprises. They own 8.3% stake in Shriram Finance. So that potential could be the next seller as and when that happens. So that's something to track. But because of the large block and it did happen in the pre-open, the stock is in a bit of a reaction in today's trade. In fact, just 10 days back, the management was on our channel and they sounded quite confident about the business as well. So they spoke about 10% growth to continue in FY24 as well. They expect 10 to 12% growth in the two-wheeler segment and 10 to 15% growth in the farm equipment segment. So a lot of the levers are in place for the company to do well. That's the management comment. But today's rally is largely because TPG is cleaned out and they've sold their entire 2.6% in Shriram Finance today.
Okay, Nimesh, thanks a lot for that. Let's slip into a quick break. On the other side, our special segment, it's the economy coming up. Lata will get chatting with Debashish Mishra of Deloitte India and Anubhuti Sahai of Standard Chartered Bank to talk about India's trade deficit in May, which is the highest since December 2022. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of
Welcome to it's the economy. India's May trade data had some elements of concern. Firstly, the services exports data will come up for you. They have been firing away for the past year, but they've shown a distinct slowdown in May. Actually, at 25 billion services exports in May, they are a good 15% less than the average from January to April. The second point of concern, India's goods imports in May came in at over $57 billion, and that is nearly 9% higher than the average from Jan to April. Now, put the two together, falling services exports, rising goods imports. The result is India's trade deficit in May is the highest since December. And if you take goods and services, because services is a surplus, the deficit is still at $10.35 billion in May, which is the highest since November 2022. Now, is this a matter of worry? We have two experts with us, Debashish Mishra of Deloitte. He specializes in the flow of services exports. Deloitte itself has a large outsourcing unit. And in a minute, we are going to be joined by Anubhuti Sahai, the economist from Standard Chartered Bank. Debashish, first, good morning to you. Deloitte itself services a lot of external clients, and there are a lot of GCCs being set up. Why this downcast number, 25 billion? Like I pointed out, it's a good 15% less than the average from Jan to April.
Good morning, Lata, and thanks for having me over. You're right, we are seeing softening of demand in certain segments. And as you can see from commentary from large tech providers also, particularly we are seeing there is softening of demand and clients are being cautious in the BFSI segment. But I'll tell that there is a distinction being made, whether you are talking about run the bank or change the bank. If you are talking about the run the bank segment of it, demand is still flowing, and that's the base demand which will continue to flow. Where there are transformation projects like change the bank, their clients are being a bit cautious because you know better. The Fed and ECB rate hikes are still continuing, and there's been some failures of some banking institutions. So there's been a bit of cautious in terms of client spend in that segment. But there are other segments like pharma, life sciences. You have, some of those consumer is neutral. So those other industries are neutral. As I mentioned that, there is softening of demand in the BFSI segment.
No, I take your point when you say that run the bank kind of services are continuing, which means run of the mill kind of services, but transformational software is not coming. But Debashish, when we last spoke, we were not talking about software at all. It is non-software exports of India that suddenly saw a surge in the last couple of years. We have been doing audit, tax, compliance, AI, a whole host of middle offices have gotten exported to India simply because labor was expensive abroad probably, or India has simply more chartered accountants and lawyers than anyone else. Do you think that trend has slackened a bit as the wage inflation probably has lessened in the West?
Not at all. I don't see that trend happening, and that's a more secular trend. And you are right that when we last spoke, we spoke about non-IT services exports growing, and we believe that that trend will continue. We believe that more and more GCCs will continue to come into India, and the existing ones would expand their range of services. Also, what we are also seeing is non-English speaking countries like Japan and others are also, large companies are expanding. What we had seen from English speaking OECD really focusing on the GCCs. Now that's expanding to non-English speaking countries like Japan and Germany. Okay. So that segment we don't see. In fact, that will continue to expand. And interestingly, since we last spoke, Deloitte has opened 3 offices in Pune, Calcutta and Chennai, and expanding our workforce. So obviously we see that that trend is a more medium to long-term trend, and that demand will continue to flow in.
Okay, I can't argue with a man who has put his money where his mouth is. I mean, your company. So no danger to non-software services exports. It is only software services which probably have slowed because of the slowdown in the BFSI space in the West. Anubhuti, good morning. Thank you for joining us. Would you largely concur with Debashish? I mean, this fall in services exports in May stands out. Do you think this could be a secular trend?
I think, Lata, the kind of numbers which we saw for services exports, especially, like a $14 billion of services exports in one single month, those numbers did look unsustainable. Can we go further lower? I mean, Debashish would be a better person to comment on it, but our sense is that probably we should stabilize between, like $11.5 to $12 billion on a monthly basis for total services exports going forward.
You're talking net, that is gross minus the service imports. Okay.
Yes, I'm talking about the net number. So we have built in a $12 billion of services exports for remainder of FY24. As mentioned, there can be some softening in software exports, but of course there is this strong support which is coming from the non-software segment. Okay. And even if you look at the company guidance, everyone is talking about consolidation. No one is talking about a contraction. And the last year's average is pretty high. So our sense is $12 billion on a monthly basis is still feasible when we are looking at it from the balance of payment perspective.
No, I take your point on that, that 12 billion perhaps will be sustainable. But last year we saw a month-on-month increase in services exports. So, they were able to match the goods deficit. Now, for the next question, Anubhuti, and that's more important, we may be striking a higher goods deficit, isn't it? Look at the very strong goods imports that we saw. And again, the math will come. Goods imports in May at 57 billion were about 8-9% higher than the average from Jan to April. So isn't that a worry that we are going to run up a higher goods deficit?
So again, here we'll take a step back. The question is, in our point of view, the April trade deficit of $15 billion was unsustainable. And May's $22 billion of trade deficit, in our view, is again unsustainable. And I'll say, there is a reason why we say so. $15 billion of trade deficit on a monthly basis is comparable to what we used to have pre-pandemic. Commodity prices are much higher. India is doing much better in terms of growth terms. So having such a low trade deficit didn't make sense to us even back then. $22 billion of deficit, or what you're talking about, $57 billion of imports. Those kind of import numbers were last seen in the middle of 22 when we were in the episode of very elevated commodity prices.
Exactly.
Prices have come down significantly. So our sense is this number also looks unsustainable. We will come off. We are definitely not going back to $15-16 billion kind of a trade goods deficit on a monthly basis for rest of the year. Our sense is we are likely to average closer to $19 billion. And bulk of the correction, in our view, will probably come from the non-oil, non-gold deficit, which probably increased a lot in May as we imported a lot more. Commodity prices were comforting. So probably we imported a lot more, whether it was coal or chemicals, which led to this surge. And maybe because we imported very less in April. And
that
there was
is the
a pent-up
point.
demand.
That is the point. Commodity prices were not high in May. It is the volume that has gone up. Chemicals went up. Machinery exports have gone up significantly. And as you point out, coal, so non-metallic metals, chemicals, all this indicates an industrial growth in India, which is very good. And like I guess we discussed with you as well, the industrial output, IIP numbers for April also, I mean, the average I got was 1.5 or thereabouts. And we ended up with a 4.25% growth in IIP. So Indian manufacturing, Indian industry appears to be firing very well, whereas the world is slowing, which is why our exports appear to be stagnating while imports are surging. Can't this not lead to a 22 billion trade deficit month after month?
I don't think so, Lata. And probably we just need to look at it item by item. So coal prices, we all know, probably were lesser vis-a-vis the past few months.
Yes.
So it was a volume-led increase. If you look at, the coal, we spoke to a lot of experts who are in this space, and, there's no as such a shortage. There were few, few power generating plants where there was some shortage, but otherwise, in general, it looks like, okay, so probably there was some stocking up impact there. Machinery, what you highlighted, we have seen in the past too that it's slightly a volatile component. There are a few months where we see some lumpy demand pushing up the import volumes and therefore the import value, but then it kind of smoothen out. So our sense is if this jump up in volume demand was one-off, say for instance like coal, or it was compensating for very low volume imported in the month of April, then it should smoothen out in the remainder of the year. Let me make it very clear. We don't think we will see an average trade deficit, like an average trade deficit of $17 billion, which was the case from Jan to April. That was a very low. Our sense is we will settle closer to $19 billion, $19.5 billion for remainder of the year, given where commodity prices are, and given our view that we will also see some moderation in domestic demand as we move further into fiscal year 24.
Okay, so you are betting that the rise in interest rates will perhaps mellow Indian growth, or maybe the El Nino will, and therefore we perhaps will not be importing so much. But Debashish, any numbers you want to add in terms of what you are expecting by way of services exports? The import deficit could still be there. We don't know. Goods deficit could still rise. But how confident are you of services exports? Say, what is your monthly run rate expectation or the annual run rate?
We don't track these numbers, but what I can tell you is that clients are obviously during these kind of times also consolidating a lot of vendor contracts. Also, they are trying to be very innovative, asking suppliers to have more skin in the game by having value billing, having BOT kind of contracts. So obviously, the Indian service providers are also pretty cutting edge in that sense in the services exports market. So what I don't see that there will be a slowdown in that segment. Some segments will definitely compensate for the sectoral slowdown in certain other segments. Like we are saying that energy and resources, there is absolutely no slowdown, and transformation projects are also happening. As I mentioned, life science, it is happening. Probably the rate of growth what we had seen in FY23, that was unsustainable. That created a base, but that demonstrated also the realm of possibility in terms of what all can be exported other than technology services. Software. So that, to my view, the rate of growth may moderate, but definitely it will be much better than the goods mercantile exports. So.
Okay. Yeah. Just a final question to Anubhuti. Even assuming that we are running up annual deficit of 12 billion, a monthly deficit of 12 billion, goods and services included, and even assume it goes to say 13 or 14. Is that a worry? We seem to be doing very well on capital flows, right?
Yes. So, just the starting point here is, Lata, I think 12 billion is a very high number for services and goods put together. Probably we will, the worst case I would say is $10 billion. Our base case is $7 billion. Now, will it be an issue? One big difference between 2023 and 2022 is the revival in portfolio investment flows. We have clearly seen a pickup. So even in the month of May, where goods deficit widened significantly, services exports slowed, our sense is India still clocked a healthy balance of payment surplus. If we adjust the FX reserve changes for valuation impact, our sense is probably in April and May put together, we probably clocked $18 to $20 billion. And that is One, on the account of portfolio investment pickup. Secondly, if you recall, the governor mentioned that after a few insipid years, months, we have started seeing some pickup in FDI also. We do not have the data, but that's another segment which we'll have to watch out very carefully. So capital flows probably better on both FPIs, FDIs. Also the commercial borrowings. This year, the repayment burden is lesser vis-a-vis last year.
Okay.
So we do have a better buffer on capital account. But again, I mean, CAD will be far better than what it was in the previous year. Our forecast is 1.1. Even if I assume the worst case scenario, it won't be more than 1.5% of GDP, which will be far better than 1.9%, which we saw in fiscal year 23.
All right. On that optimistic note, Anubhuti Sahai and Debashish Mishra, thank you very much for participating in this conversation. We don't have to, extrapolate the high trade deficit in May too much, is Anubhuti's point. And I think the larger secular point coming from Debashish Mishra is that services exports may be lower because the global banks are not giving too many orders to Indian IT companies, transformational orders. But the non-software exports is a long-term story, so we really needn't worry about current account deficit or balance of payments problems. Far from it. On that positive note, we wrap up with the news that unfortunately the Nifty is still a good 85 points away from its all-time high, but it could still happen today. Let's wait and see. Fingers crossed. Chartbusters up next.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives. Once these two
The Indian market opens higher to move within touching distance of record levels, but recedes from highs as financials weaken. The mid-caps continue to trade strong at record levels itself.
Shriram Finance gains following a big block deal where 2.65% of equity changed hands. Sources suggest that PE firm TPG is the likely seller.
Jindal Power and Steel surges as Kotak Institutional Equities upgrades it to a buy from reduced rating, also raises its target from 580 rupees to 740 rupees, citing a transformational upcoming 12 months for the company.
BHEL rallies after it comes out of F&O ban. The company had been placed under the ban in May this year.
Five Star Finance gains after Nomura initiates coverage with a buy call and a target of 750 rupees. The brokerage says the company is highly profitable and could grow AUM at 30% CAGR for the next 3 years. Good morning, you're watching us here on Chartbusters. I'm Mangla Malu. Today with me is Ekta Batra. Ekta, you know, every time someone says that something's coming, you can be rest assured that it may not be coming immediately. And we're talking about a record high for our indices as well. We're within less than 10 points away from record high. And from there, we've seen a bit of a profit booking, so to say.
Hi, Manglam. Yes, absolutely. As we know, good things take time in life, and there's no pain or there's no gain without pain. So maybe there is some amount of holding off as of now. But the big present is that the mid-cap index continues to trade at a record high. We did have, we were just about 7 points away from the Nifty record high. So we're just, for all good
practical purposes,
all practical
we are
purposes, we're already there at those levels. The Bank Nifty, once that starts participating, I'm sure we'll get to those all-time highs very rapidly. So it's just a matter of maybe a little bit of buying coming in for the financials. But nonetheless, we do have a technical check lined up. We have Shivangi Sarda, who's joining in to tell us what she is tracking today. Well, Shivangi, welcome to the show. I'm sure you've been flooded with calls since morning about how the markets could be at record highs today. So what are the positions that you would be strategizing?
Good morning, Ekta. Good morning, Manglam. Thank you for having me on the show. So yes, we are just, merely a few points away from lifetime high levels. But of course, as you said, good things take time. So, some sort of consolidation could be expected over here. Overall stance is quite positive to range bound, but we might see some sort of, halt over here before it actually touches and crosses. But then again, we've seen that there has been good support-based buying as well. So intraday support of 18,710 would be an important level to watch out for the index right now. For an upside move towards 19,000 levels with a little hiccup at around 18,888 levels, of course. Talking about Bank Nifty, this has been underperforming from the last 2 weeks, and the reason why Nifty has not been able to, soar higher. So there has been, of course, good support-based buying over here as well, but then the pace of the buying is quite slow. So the lack of momentum over here is creating some sort of consolidation and sideways move in the market today. So support over here would be 43,500 levels, and an important resistance to watch out for in the Bank Nifty would be 44,144 levels. But then again, of course, buy on declines would be strongly, much more on the Nifty side than as compared to the Bank Nifty.
All right, so the buy and dips is more likely on the Nifty than Bank Nifty. It was interesting because on Friday's trading session as well, while the FIs bought almost 1,200 crores in index futures, most of that was directed towards Nifty itself, and only about 100 crores was towards Nifty Bank, which outperformed on Friday. So let's see where this goes. Individual stocks, I mean, no problems out there. The mid-cap index continues to do well. A fresh 52-week high, a fresh record high on that index today as well.
Absolutely. We've seen that, the entire market breadth is quite positive. So the participation across the, sectors and across stocks is something which is quite positive in this rally. On my radar first is Titan. The stock is holding very strongly after surpassing its previous hurdle zones, and any small declines are being converted into buying opportunities in this stock. Recently, it's given a fresh breakout, and continuously long build-up has been seen in this stock, which is adding to the strength and of course strengthening the base. So recommending a buy here with a target near 3130 levels and a stop near 2950 zones. Second pick on my radar is L&T. This stock has been one of the strongest in this entire rally, and it is continuously making higher lows from the last 5 weeks. It has given a pole and flag pattern formation breakout on daily frame, and in this series we've seen short covering move so far, and now fresh longs are being built up in this stock, which opens up an upside for 2500 levels in this stock with a stop near 2350.
Okay, all right, we're going to let you go on that note. Thanks very much for joining in and giving us all of those stocks as well as strategies. Let's shift focus to our special segment where we will get you a few ideas for profit from Money Control Pro. Lekha Badlani of moneycontrol.com joins in now to talk about a stock that she's tracking very closely today. Lekha.
Yes, thanks. So we like Paradeep Phosphates in the agrochemical space. In terms of its recent fourth quarter performance, the company posted strong top-line growth, up 92% YOY, supported by higher volumes. Although EBITDA margin was negatively impacted due to high-cost inventory and one-time expenses towards its Goa unit. Paradeep's FY24 outlook remains positive. Its planned investment for backward integration of phosphoric acid, sulfuric acid and ammonia remain well on track, and the benefits should start kicking in from the current year. Additionally, the prices of other key raw materials that the company imports have come down significantly in the past 6 months, thereby leading to cost tailwinds this fiscal. Also, with the Goa site now fully functional, Paradeep would be operating at a higher capacity of 3 million metric ton per annum this year, compared with around 2 million metric ton per annum in FY23. Overall, we think FY24 would see improved margin performance, aided by higher volumes due to improved capacity, value-added NPK products at its Goa site, and operating leverage benefits. The stock is corrected around 20% from its 52-week high and is trading at a PE of 12 times its FY25 estimates. We would look at the current levels as a long-term buying opportunity. That said, the development of southwest monsoon this year would be a key risk to watch.
All right, that's about Paradeep Phosphates. Lekha, thank you for that. On that note, we'll step into a short break. On the other side, we have an important corporate lined up for you. K. Ajit Kumar Rai, who's the founder and chairman of Suprajit Engineering, joins in to discuss the company's business prospects.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of
Welcome back. The Nifty is holding around that 18,800 mark, but a lot of broader market mid-cap IT stocks are doing extremely well. So just pull up the intraday chart of LTI Mindtree. it's at the high point of trade. Giving it company at the high point is Persistent Systems and Coforge as well. And if you notice the intraday chart of all these stocks, you would realize all of them started moving almost in tandem. So you have L&T, Mindtree, Persistent Systems, and the intraday chart of Coforge comes up for you. All of them moving up in just the last few odd minutes. So this is a trend we will continue to monitor. But let's move on and let's invite the first corporate on our show. We do have the management of Suprajit Engineering. It saw its margins come under pressure in FY23, but it did believe that going forward the margins would see an improvement to the tune of 12 to 14%. K. Ajit Kumar Rai, who's the founder and chairman of Suprajit Engineering, joins in now. Thanks a lot, sir, for joining in. Before we talk about the operational performance, just on general demand itself, what are your thoughts? Earlier you said that the industry would grow anywhere between 5 to 10%, and you would grow faster than that. What are your estimates of growth in FY24?
Good morning, and thank you for having me on your channel. You're right. I think although I see in the newspapers that May numbers have been very interesting, but the trend for the year, I would still think as a single-digit growth. I think the passenger vehicle will have a very strong market. I think it will grow well. It will hit the historic high. I also believe at the same time that two-wheeler, is not out of the woods. In fact, my belief is that there is a structural shift in the two-wheeler side of the business, both from the point of aspirations of the people and also from the point of EV. So that I think will continue to struggle. I believe the 18-19, we had 24 million two-wheelers produced. I don't think we'll be anywhere near that this year or in the next coming couple of years. Non-auto business has had some weakness. Globally, of course, India, there's no non-automotive business for us. As far as we are concerned, I'm talking about the global business. Non-automotive is the one that has got some weakness. EV, I think because of this FAME subsidy issue for a few months, the business will be low, but I suppose that is a trend very clearly, so that would grow as well. Against it, I think we'll continue to outperform. We have given our outlook saying that this year we'll have a reasonably strong double-digit business growth with the margin improvements.
Okay. Sir, you have indicated that you have faced trouble in the two-wheeler segment. It's not even recovered to the pre-COVID levels, and you are indicating that there's a structural shift which is taking place. If you could elaborate a little bit in terms of what is taking place for your business when it comes to the two-wheelers, are you now reducing your focus structurally as a company from the segment? And do you think it's because of a structural shift, or do you think that it's because people just can't afford two-wheelers as much as they could before? A rural slowdown?
Yeah, I think the rural slowdown or the buying pattern itself has changed, I would say. The aspiration is to buy a higher powered vehicle, for example, go away from the 100, 125cc to 150 or 200cc vehicles. So that is where the strong growth is happening. If you look at other countries, like for example, China had a 40 million two-wheeler business. Today it does a 25 million two-wheeler business, whereas their passenger vehicle is world's largest. So I think the similar shift is probably seen here. As far as we are concerned, we have seen this shift likely to happen 10 years ago. We have de-risked our business. What was 90% two-wheeler business is just 25% today. So for us, that 25% business, which is two-wheeler, also being further de-risked with our strong, entry into the electronics division. So I think we are protecting ourselves pretty well from this two-wheeler shift structurally.
Right. You said that you will see very strong growth this year with margins improving. What does that mean in terms of numbers?
What we have guided, as you rightly said, is that last year we had about 11% consolidated EBITDA margin. And we have said that this year it will go to 12 to 14%, whereas historically we have talked about 13 to 15%.
Exactly.
That basically gap of about 100 basis point is largely because of our new acquisition, LDC from Kongsberg, and that division will continue to have one more year of consolidation this year, which will still be in single digits this year, and that's why probably for this year there will be a drag. And I'm pretty sure by next year we'll go back to our original estimate of 13 to 15%.
And on LDC itself, there are a bunch of restructuring projects that you're doing on Phoenix Lamps division. And LDC, you believe that the current contracts which will get replaced by newer contracts that will come at better prices. So what's the LDC revenue opportunity and when does it get to double digits?
I would say that we are targeting on LDC a 100 million business this year, US dollar. The margins, which was, I think, in a decimal, I would say 1% or so last year, probably will go to some mid-double digit, mid-single digit or high single digit by end of the year. And I think next year we should go back into double digit. I think that is the roadmap for LDC for us. And you're right, with the old contracts will slowly, automotive works on a life cycle of 5 to 7 or 9 years. And quite a few of the older projects will, fall off the table from production and the new contracts. We are winning some very exciting new contracts within the controls division. LDC is getting now merged as a Suprajit controls division. As a controls division, we are getting a strong automotive new businesses. I think that will drive the margins in the next few years.
For your non-automotive business, you had indicated some headwinds in your conference call gone by. For example, maybe in the US markets. Can you just tell us what the business is looking like for FY24? What do you expect it to grow at? What are the challenges that you're facing in these segments, in these geographies?
Amongst our 4 segments, that is automotive, non-automotive, aftermarket and two-wheelers, I think the most challenging segment for us, which is 20% of our business, is in non-automotive. It is not only in North America, even in Europe or everywhere in the thing, non-automotive products are a discretionary products. Whether you want to buy a lawnmower or a sports vehicle, outdoor sports vehicle, etc., etc. When it's become discretionary, that is the one that gets first hit by the economic slowdown. That's exactly what is happening. So we're not really seeing a growth in the non-automotive business, but it will be overcome or outdone by our other segments, which will be growing strongly. So overall, we still see a double-digit growth for the year, although globally the growth will be almost like a 0%.
All right, and just a final quick one on 2 of your divisions. One is the aftermarket cable division, where there was a new facility which has come by. So how much will that aid your revenue in this year? Just wanted to understand that at peak, what does that do? And secondly, in your conference call, you had said that the key for the next 5 years for Suprajit will be the electronics division. How much can it scale up to? What is the business opportunity that you're witnessing there?
On the aftermarket business, I think we had 3-4 separate facilities in a much smaller scale operating the aftermarket. We just regrouped into one large facility so that the order execution, order management, production, etc. becomes streamlined. This will slightly improve the margins of operation, not really the output as such. Output will be depending upon the demand. So we're in a much larger facility, which will be good enough for us for the next 5 years. Now, coming to the electronics division, it is our new baby, and I think it's something that we are very excited about. It's a homegrown product developed at Suprajit Technology Center that is being commercialized at our electronics division. Of course, it's starting at a very small base, but the growth would be like any startup. It will have a very good growth from those small base. So it's expected to do some very exciting new contracts, particularly in the in the electric vehicles, like two-wheeler electric vehicle space, and also three-wheeler EV space. So I think we're getting some exciting new businesses, but it is a long-term story, new division for the company. But we do believe it is a future direction for us to go beyond cables into new products.
Which is why I didn't ask you for the growth. I understand that it'll grow very fast like a startup. But say 5 years from now, how much of your business do you think will come from this division?
We have set up this division under a very senior person, senior vice president, and we wouldn't do that unless we think there is an opportunity for the number that you mentioned. Whether it is 5 years, 7 years, I don't know, because it all depends upon how these businesses grow. But we are very excited. We are putting everything behind it, and it's been headed by a senior person, and the whole team is in place. So it's a much larger team for a small business today. So obviously, it means that we are putting a lot of focus for this as our growth engine for the future.
Okay, all right, Mr. Rai, we've completely run out of time, but interesting, guidance coming in from you. with regards to the non-automotive segment as well as the two-wheelers, which would probably be the more sluggish segments in the business going forward into FY24. But the other catalysts should continue growing, or the other segments should be going strong, and margins should be between 12 to 14%. Thanks very much for joining in. Time for a short break, but we'll get you more on the markets. Lot of stocks in focus, all that and more just after a short break.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters.
Welcome back. Well, you're still tuned into Chartbusters on CNBC TV18. Well, a couple of stocks which are in focus is the entire NBFC space. So we have a couple of bullish brokerages which have come out with notes today. For example, I'll start with JP Morgan, which has said that there is a perennial boom-bust cycle of NBFCs, which is again recovering and may last for the next 4 to 5 years. Both domestic and foreign investors suggest under allocation to this segment. There is scope to add beta and portfolios via NBFCs. Their top picks are Bajaj Finance and L&T Finance. Morgan Stanley says in large cap quality group, their key picks are Bajaj Finance as well as SBI Cards. Manappuram, PNB Housing, Shriram Finance can give outsized returns according to them. Outsized returns are likely in high-quality insurance names as well, SBI Life, HDFC Life, as well as ICICI Pru. Lastly, HSBC has written, and they say that there was a strong EPS growth cycle which is continuing. NBFCs can outperform. They have upgraded MMFS to buy from hold. Target price is raised to around 360. Bajaj Finance is a buy. Target price is raised there as well. LIC Housing Finance, Chola Investment, Credit Access, L&T Finance, SBI Cards, all of these stocks are buys, and target prices have been raised across the board for all of them. So it is definitely a bullish amount of calls coming in for the entire NBFC space.
Yes, bullish indeed. In fact, one of them was also an initiating coverage that came in on 5-star finance by Nomura. So apart from these NBFCs, that stock too doing extremely well. But market in profit booking mode from very close to record high numbers, and We have the mid-cap index doing well. The question is there a twist in the tail for the second half? We wrap up on this edition of Chartbuster. Stay tuned. Trading Art comes up next.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year our total production was around nearly about 834, 800. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target, a very ambitious target. And production is going on accordingly. Normally April, May, June, this is the time when production is reduced. But this time it is going on very well. As far as thermal power plants are concerned, little
Good morning and thank you for joining us on a brand new edition of Trading Hour. We have kicked off a week and things have turned quite a bit. Pavitra is of course here with me in the studios. I'm Surabhi Upadhyay. Pavitra, we started the day with our countdown and our timer to the all-time high, right? But things have turned pretty quickly, and now we are, actually looking at a sell-off, and it's not just India. Days low on the Nifty. Not just India, but actually across the Asian markets as well. Yeah. There is a pause. We saw that on Wall Street, and even now you look at Hong Kong, Shanghai, etc. A lot of those markets are also taking it easy.
Oh, absolutely. I mean, it's 100 points from the highest level today. We were doing that, entire countdown. If only the banks could just move it, if Reliance could just move it, we'll get there. But, you know, it's perhaps just a matter of time.
I suppose so. Banks have started a bit of a bear party, but now there are other people entering that party. That's the issue. Okay, so let's talk about the trends that are at play. Start with the banks, because the problem for the Nifty really started in the morning. Within the first 20 minutes, banks had decided to sit out today. Unlike Friday, where banks were part of that action, there was a lot of dithering. Nifty Bank has let this decline down. So let's pull up the weakest links on the Nifty Bank. And you'll see plenty of names out there. Barring an HDFC Bank, most of your other large cap private financials on the banking side are trending lower. Kotak Mahindra is down 2%, Axis down 1.5%, ICICI Bank, a lot of pressure by the banks. It's not just banks, however, that you can blame for this. The bulls will have to look at Reliance today. They'll have to look at stocks like Hindustan Unilever and some of the IT names as well, because they're selling from these other pockets in the market. So let's pull up some of these stocks. There you go. Reliance is not helping the bulls' case at all today. There's a stock like Lever that's down. And on IT, last I checked, Infosys was sitting on the fence. TCS was still up, but Infosys, yeah, it's down about 0.25%. Wipro is also lower. So Nifty IT is also absolutely at the flat line. So you do have some problem areas out there. However, what is still working in the market? NBFCs, and we'll talk a lot more about that as we go forward. There are quite a few brokerage reports that have come in sounding very optimistic around NBFCs. A lot of them have cited Bajaj Finance as one of their top bets, and that's why that stock continues to hold high, along with Bajaj Finserv. So those are your top two performers on the index. And then there is a hint of caution, and that is well explained in the way pharma stocks, look at Divi's, Sun Pharma, look at the way they're finding traction up and about. L&T is the only one, really. You know, L&T with the order coming in for another package of the bullet train, the high-speed corridor between Mumbai and Ahmedabad. So that seems to be working well for that stock and defense. Speaking of defense, Pavitra, that's really where the action is. Like, large caps are sulking. They're having a bit of their own Monday blues. But look at defense.
Oh, absolutely. This one is just surging ahead of that big meeting of Prime Minister Modi that will happen on Tuesday. We'll talk more about that as well. But something like an HAL is seeing a big move. Of course, that is the big one in focus. But several other names, you know, you have something like a Paras Defense which is surging, BHEL, Mazagon Dock, Cochin Shipyard, all of these seeing some good gains come through. So this pack definitely seeing a lot of action on the upside. The NBFCs Surbhi has mentioned, but just take a look at some of the rates. They'll be up on your screen as well. And metals are the other pack. You know, I know they've come off significantly from the highs today, but still take a look at some of these individual names. Indian Metals, for example, that is the 1 month move for the Nifty Metal Index, by the way, up 6%. But today you have names like JSPL, Indian Metals, 6-7% in terms of a move there. Godavari Power is up almost 8%. So this pack also seeing a lot of action come through. But let's get to the big story on Trading Hour today, which is that Prime Minister Modi will be heading to the United States for a 3-day state visit. This starts on Tuesday. So a lot of focus really on that, and a lot of focus on defense ahead of that as well. US President Joe Biden is set to conduct high-level talks with the Prime Minister as well. So Parikshit is really here with all of the details that we have on the key agenda behind this meet. Parikshit, take us through what we should watch.
Well, this meeting between Prime Minister Modi and President Biden has been touted as historic, unprecedented, a visit that will be high on celebration, but will also have a lot of hard work. Those were the words of US NSA Jake Sullivan, who was in India just last week. Now, what we can expect, the Prime Minister will be there in the United States on 21st, 22nd and 23rd. He will be there for 3 days and 3 nights. On the first day, he will receive a ceremonial welcome at the White House. This will be around 7:30 p.m. India time. He will have a high-level meeting with President Biden. There will be a bilateral meeting, which will be one-on-one. There will be a delegation-level talks as well. On the same day, he addresses the US Congress, that is on the 22nd. He will also be part of a state dinner that will be hosted by President Biden and First Lady Jill Biden on the 23rd evening. He will be addressing a diaspora event. All of this begins with the Yoga Day that happens at the UN headquarters in New York on the 21st. So 21st morning, we will see Prime Minister at the UN headquarters kicking off Yoga Day celebrations across the world from the UN headquarters. And it's from 22nd onwards that his meetings with President Biden really begin. And we believe that both leaders will spend an unprecedented amount of time together. There will be a lot of business meetings, a lot of high-profile CEOs from the semiconductor industry, defense industry, and the US manufacturing industry who will also be calling on the Prime Minister.
Okay, Parikshit got that. So, Pavitra, I hope you've got your yoga pants ready, right? For the 21st, we have to take a leaf from Prime Minister Modi's books. But Parikshit, you've set the agenda out very nicely for us. Now let's talk about that big deal which you've been tracking for so many weeks, right? And you've been telling us about this mega engine deal between GE and Hindustan Aeronautics. So what more do we know in terms of things like tech transfer, size, execution, etc.?
Well, this will really be the big ticket announcement from the Prime Minister's visit. It's been in the works for over 6 months now. Remember, in the month of February, the Indian National Security Advisor Ajit Doval has visited the United States and met Jake Sullivan, the US NSA. That was the first time there was talk about a GE deal for co-production with an Indian counterpart. We believe this has now been cleared at the highest political level by both sides. Now, what will this entail? This will entail co-production of the GE jet engine, which will power our fighter aircraft, including the Tejas program for the future. All of this will be manufactured here in India. Koraput, which is HAL's engine unit, is being considered as one of the locations. What will be the kind of technology transfer we're getting? We're told that we have been able to get a substantial deal from the United States in terms of tech transfer. We will get up to 80% technology transfer over the next 3 years. Our sources tell us that after the signing of the deal, India and US will begin the process of getting the manufacturing equipment. Essentially, HAL will start buying the equipment needed in the engine production factory. All of this will be procured from GE. The manufacturing and the tech transfer will happen in phases. So by the end of 3 years, this is what we've been told, that 80% of the value addition to the jet engine will happen in India. So the defense industry, the government, saying that this is absolutely unprecedented, be it the United States, UK or France, none of them have this kind of a relationship or technology transfer of this magnitude. We're also told by our sources, the defense industry, and that's why we will see a positive impact on many defense stocks as well, because the government believes that 600 to 700 Indian MSMEs could benefit from the jet engine supply chain over the next 3 years. So all in all, a good deal. At the same time, we're learning that many enabling mechanisms, such as mechanisms to guarantee procurements of parts from the United States, reciprocal procurement of defense components, those agreements will also be signed to make sure that there is no kind of loophole, regulatory hurdle or import-export hurdle when it comes to transfer of components when we need them in times of crisis.
Got that, Parikshit, and that's why the entire value chain, I mean, at least on the listed side, all of these stocks are so excited. I just want to take an example of a stock like Midhani. By the way, Parikshit, thank you very much for giving us all of the details, and Parikshit has been following that story exclusively for several weeks and months now, that big mega deal between HAL and GE. Pull up a stock like Midhani, Mishra Dhatu. Now that makes a certain high-grade steel that goes into some of these defense equipments, the aircrafts that we're talking about. And just look at the excitement around some of these stocks, 7.5% there. Pavitra was mentioning certain other names earlier. HAL itself is up about 1.5%. You've got Paras Defense, the entire lot. Mazgaon, anything that has anything to do with defense, everything that has anything to do with defense is really up and about. That is the big story on the show today. We'll take a quick break on that note. On the other side, we will put the spotlight on, of course, the commodities universe. Today, we are talking natural gas with Manisha. She will tell us all the factors that are at play.
I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it
Hey guys, welcome back. You're still tuned into Trading Hour here on CNBC TV18, and let's talk about the monsoon as well now, because we have been getting some weather updates. The monsoon advancement has been stalled in Maharashtra owing to weak westerly and southwesterly winds as well, and the IMD says that the monsoon has reached very close to the Ratnagiri region. However, the winds are not strong enough to really pull the rain towards the North Konkan and Mumbai regions. So the current spell of rains that we have been seeing over the past few days are largely on account of the cyclone Biparjoy, and this is what we're learning from IMD officials. In fact, earlier today we also spoke with Mahesh Palawat of SkyMet, and he says that they expect the monsoon to reach Maharashtra in the next 3 to 4 days. This is a little bit of contrast to what the IMD has been saying. They also expect rains to be satisfactory till the first 10 days of July. So listen in to what they had to tell us.
Winds, lower level winds will get strengthened over west coast of Maharashtra, particularly Maharashtra coast and South Gujarat coast by 23rd of June. So we have to wait for another 3 to 4 days for monsoon to reach Maharashtra, and thereafter there will be steady progress in interior parts as well. The rainfall will start increasing in the month of July, but as the monsoon this year was weak, onset was weak, and cyclone has pulled the moisture away. That's why the onset of monsoon is delayed, but now the rains will be satisfactory until first 10 days of July at least. The Kharif sowing is delayed by say 10 to 15 days, but now the things are looking very bright. We have to wait another 3 to 4 days at least. Predicted monsoon to be 94% of long period average, that is below normal, and it seems to be like this. Although rainfall will be good, because until now the monsoon has not progressed as per norms.
Okay, so that was SkyMet giving an optimistic scenario. They're saying that, okay, we are at a 30-35% deficit, but now in the next 3-4 days, the rains should really pick up across all parts of Maharashtra and then heading further into the hinterland. Let's bring in Manisha now. Today, she's putting the spotlight on natural gas. And Manisha, what is this? Prices are going up again.
Well, yes, they are. And the move has been quite strong for various varieties and various time zones on the world as well. So when you look at the US markets, the previous one was the biggest weekly gain that we have since the month of March. The US price is also trading at a 4-week highs. And we have seen prices gain up by 17% in the previous week. Not just the US gas prices, the European gas prices also have seen stronger gains. We've seen prices gain up by nearly 60% until now for the month of June as well. But the reason that you are looking at surge in prices is because the IEA says that the US gas storage has risen by nearly 84 billion cubic feet. Markets were anticipating a number of 96 billion cubic feet. And then the US gas production also is off its record highs that we saw in the month of May. That has been supportive. And air conditioning demand is expected to pick up in the Western world as you see the summer season begin there. It is a sooner summer season with temperatures really getting above normal already there. The Europe gas storage also, while it stands at 72% right now, the European Union has been saying that by 1st of November, they would want the storage at around 90%. So there is going to be more buying coming in from Europe that is expected to support the prices. If you look at the overall prices itself, well, last year, August was at around $10, and that was because there wasn't enough gas coming in from Russia Russia and Ukraine escalation tensions were also weighing into the markets. At this point in time, while we have seen $2 of a support come in, the markets do believe that within this summer season, and especially with the kind of Atlantic hurricane season that we are already witnessing US, you will see further gains come in for prices.
All right, further gains likely on natural gas. Manisha, thanks a lot for taking us through all of those details. With that, we're going to get into a short break now. But when we come back, we're going to discuss the market technicals. Ashish Kyal will be with us. We'll also get you some of his fresh trading bets. So stay with us.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14,
Welcome back. Here with us on Trading Hour. The market's down about 0.25%, so the bears have firmed up their grip, at least for now. But in terms of specific stock action, there's still plenty of green out there. Now, Shriram Finance has been moving higher in trade. This after we saw a large block deal happen in the pre-open segment. Nimesh is here. Nimesh, you were alerting us that there could be a block. It has happened. So what's the buzz around it?
Hi, sir. The fact is that there was a large block, and looks to me that TPG was a seller in today's block deal. The stock has reacted sharply because the buyers apparently are strong names, is what I understand. The block happened in the block window, so there was no leakage as well. And it's a clean out trade as far as TPG is concerned. So the entire 2.6% which TPG stored is been sold now. So that's been done. The other important thing to track going forward would be the other large holder, which is Piramal Enterprises. They own 8.3% stake in Shriram Finance, and they could be the next potential large sellers. So that's something to track going forward. But in today's block, I understand TPG was a seller and some marquee names have bought. In fact, the management just spoke to us a few days back, and they were quite bullish on the business going forward. So they expect a 10% growth overall in FY24 to continue. They expect a 10 to 20% growth in the two-wheeler segment and 10 to 15% growth in the farm equipment segment. So the businesses are good, the levers are in place. Now that the big overhang from TPG is out of the way, the stock has reacted sharply, and I understand some marquee names were buyed in today's block deal.
Nimesh, thanks a lot for that. 4.5% higher on this one, Shriram Finance. But actually sticking with this space, a whole host of other NBFCs are also trading in the green. And this is because there have been a lot of brokerage notes that have come through, and they're all sounding very optimistic. So Ekta is here to really round up all of the action from these brokerages. Ekta.
Thanks for that. Well, yes, definitely a lot of bullish calls which have come in on brokerages, on NBFCs from brokerages today. I'll start with JP Morgan, where they say there is a perennial boom-bust cycle of NBFCs, which is again recovering and may last for the next 4 to 5 years. Both domestic as well as foreign investors suggest under allocation to this segment. There is scope to add beta and portfolios via NBFCs. They like Bajaj Finance and L&T Finance, which are their top picks. Morgan Stanley says in the large cap quality group, key picks are Bajaj Finance and SBI Cards. Manappuram, PNB Housing, Shriram Finance can give outsized returns. Outsized returns are likely in high quality insurance names such as SBI Life, HDFC Life, ICICI Pru. HSBC, as a strong EPS growth cycle continues for NBFCs, they can continue to outperform according to them. They've upgraded M&M Financial from hold to buy, and a target price is raised to 360. They have a buy on Bajaj Finance, Chola, LIC Housing, Credit Access, L&T Finance, SBI Cards, and raise the target price for all of them. The list should be up on your screen.
Okay, got that. Thanks, Ekta, so much for all of the details there. So NBFC is definitely in focus today and managing to buck the otherwise weak market trend. Now, speaking of NBFCs, five-star business finance is the other stock on our radar. It's up almost 5% as Nomura has initiated stock. Sutaria with the details. Surabhi, so what makes Nomura optimistic on this one?
So they've initiated a coverage with a target price of 750. Nomura says that it is highly profitable and amongst the fastest growing NBFC in a niche market. They estimate the company to deliver a 30% AUM growth in the next 3 financial years, which will be driven by a significant untapped opportunity in the MSME segment, specifically in the niche small business loans, which is a loan with a ticket size of less than 10 lakh rupees. They see continuous expansion with 50 to 60 new branches expected in every year. So these two are the primarily the growth levers for the 5-star small business.
Okay, Surabhi, thanks a lot for that. It's around 7% higher on this stock, so big mover there as well. But with that, let's also get you a technical check on this market. Ashish Kyal joins us from Wave Strategy. Ashish, thanks for being with us. You know, early in trade, we were, counting down to that all-time high level, just around 10 points from that. But we've seen around a 100-point dip from that, led largely by the banks today, around 350 points off the highs on the banks. How do you think things will move from here? I know we're all watching that level, but when do we get it?
Yeah, morning to you and all the viewers. We are definitely watching the lifetime high level, but it seems that we might have to be patient here and we might achieve that soon. We are already closed at the lifetime high on Friday on the closing basis, but we have not crossed that 18,887 today, missed that by 10 points. I'm optimistic about the market. The overall tone looks bullish. There is some profit booking from the higher levels, but I think there is a very important support at around 18,710. As long as 18,710 is intact, we might again retest that 18,860, 18,870 levels, and possibly we will touch that lifetime high. So the overall tone is positive. What is little concerning is Bank Nifty. Bank Nifty is consolidating for quite some time. Today it is not trying to recover that losses. So I'm little nervous because of Bank Nifty. Bank Nifty needs to cross that 44,000 mark. There is good OI data as well at 44,000. So Bank Nifty needs to prove its worth above that 44,000, and then both the indices will be headed towards the lifetime high.
Okay, so you are still holding out the hope for lifetime highs, Ashish. In the meantime, let's talk stocks. What are the trades you're going with today?
The first stock pick is Metropolis. We can clearly see after a lot of consolidation, the stock has given a very strong breakout on the upside. The entire pharma and healthcare space, I think it's coming out of a long-term downtrend and resuming its uptrend. So it's good to be staying in this sector for from medium to long-term perspective also. And Metropolis has given a very strong breakout with good volume, so one can create long positions here, keeping a stop loss of 1347 for target of 1494. And the next stock on the buy side is Cochin Shipyard. We can see a very strong move on the upside, possible a third wave that has started. It has also shown a rounding bottom kind of a pattern here and breaking out on the upside as of now as we speak. So the overall tone for Cochin Shipyard is positive. One can create long positions here, keeping a stop loss of 579 for the target of 642.
Okay, Ashish, thanks a lot for getting us all of those fresh trading ideas. Metropolis Health, Cochin Shipyard are some of Ashish's picks. But with that, we're going to get into a break. When we come back, actually, in the meantime, while we get into a break, here's some interesting opinion that we got from Nilesh Shah this morning, Managing Director at Kotak Mahindra AMC, on where the markets are really headed.
It's a fairly priced market, neutral market, and one will have to be careful in picking up stocks at this point of time. The euphoria about India today is now with the FPIs. They were on exodus mood between October 21 to June 22, selling about $35 billion. And now they are buying back the same stocks at a higher prices. The local investors have been buying equity on a regular basis. By and large, they have been coming via mutual funds, right, rather than going directly into the market. By and large, they are focused on quality. So overall, retail investors have matured a lot. This is not to say that everything is hunky-dory in India. Even today, 89% of retail investors who are going to trading in FNO end up on the losing side. Do your SIP in mutual fund and participate in India growth story.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it
Hey guys, welcome back. You're still tuned into Trading Hour. For the market, it's pretty much where we were when we started off, around 50 points in the red, led lower largely by the banks right now. So 300-point cut coming through over there. But there are a lot of stocks in this market which are holding up very well, and JSPL is definitely one of them. It's surging over 6%, this after an upgrade from Kotak Institutional Equities. So Sonia is here with the details of that note. Sonia, what has them so bullish on this stock?
So as you rightly pointed out, this upgrade has come in from Kotak Securities, where they've upgraded JSPL to a buy from a reduce. They say that JSPL is their top pick in the metal sector at the moment. They've raised the target price to 740, which is well above the current market price. They expect a 30% upside to the current market price. Now, they also speak about how this is a transformational period for JSPL. They talk about how various projects are lined up for commissioning over the next 12 to 18 months. And the capacity of JSPL will go up by 65% in the next 2 phases. Also, a large part of their growth capex is funded by internal accruals. So yes, there is capex coming through, but it's not going to put any pressure on their balance sheet. In fact, they say that the net debt to EBITDA will peak at just about 0.8 times in FY25. They also see a potential 100% return in 3 years on March 2027 basis. I think that's the clincher, the 100% return that they're expecting in the next 3 years, and hence the stock is up quite a bit today.
All right, Sonia got that. Yes, 6%. That's quite a mover on an otherwise slightly lackluster day if you go by the indices. But really, it's all about individual stocks. And actually, even on the index, you've got L&T that's moving along quite nicely. It has been the top gainer on the Nifty, up about 2%. This after we got news that it is securing a deal to construct over 135 kilometers of the Mumbai-Ahmedabad high-speed rail corridor. And this award, this project could be worth a little over 15,000 crore rupees. We have Vivek joining in. Vivek, tell us more about this package, this bullet train package that L&T has secured. And also, there is some change at the index level, right, with respect to L&T's ESG ranking. So, twin triggers. Take us through both.
Well, you're absolutely right. Both important triggers as far as L&T is concerned. In fact, L&T is the top gainer on the Nifty. First, let's have a look at the news flow that's come in. So what we understand is that L&T has been declared the lowest bidder. That is, L&T is currently at the L1 status. Now, this is for a 135 kilometer construction package for the Mumbai-Ahmedabad high-speed railway. It's one-of-a-kind high-speed railway network that L&T is considering. Now, this particular package has been distributed into many forms. So, L&T is L1 in the package C3 out of the total 508 kilometer mega bullet train project that is currently being constructed. So, L&T's bid came in lowest, at it was around 15,697 crore. Now, Macquarie has written a note on this particular development. What they are saying is that the order win is a key positive as far as L&T's order inflow is concerned for Q1, given recent narrow misses that the company saw as far as recent biddings were concerned. So, Q1 FY24 order inflow this time around is extremely strong, almost 26,500 crore, which is up 45% on a year-on-year basis. Remember, L&T's order inflow guidance for entire FY24 is at close to 12 to 15%. Now, additionally, the one that we were mentioning is the ESG rating. Now, this was seen as a bit of overhang given the fact that L&T has some exposure to the defense business, which is why L&T's ESG rating, thus far was having a bit of an overhang and was not getting upgraded. But an important trigger has come in May. MSCI has gone ahead and upgraded the company's ESG rating to a double B from the earlier single B that they had. So again, what Macquarie says is that upgrading the ESG actually helps alleviate another key overhang on the stock. Just to give some perspective, investors typically tend to favor or avoid certain sectors for financially or value-driven reasons, and ESG falls into that particular category.
All right, got that, Vivek. Thanks a lot for getting us all of the details on L&T today. With that, we're going to get into another short break. But as we do that, let's listen in to some important market opinion that we got earlier in the day. This is from Prashant Khemka, founder at White Oak Capital Management. Listen in.
About China, I think the leadership there for geopolitical priorities has what that has meant is the economic policies have taken a back seat. And that is playing to India's advantage when India is on the front foot in terms of its economic policies. We are end of the global rate cycle, and without a massive fall off in economic activity in the world's largest economy that was anticipated, and this largest EM market, as you pointed out, competitively falling behind India, I would say, in economic terms, has meant a big boost to economic activity within India. Portfolios, obviously, we are fully invested as always, with largest exposure in sectors like financials and consumption. I think we always have to be watchful, but this time it doesn't seem like it is out of place compared to where the rest of the market is. Remember, prior 12 months, if you see, so as you rightly pointed out, this uplift in mid and small and micro caps is largely 2-3 months old. If you look at last year, 22, these segments had underperformed large caps. Not by a huge lot, but they had underperformed nonetheless. So there's been some time correction in this area.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of
Welcome back. Still down 0.25% on the Nifty and on the sensex, 50-point decline. The good thing for the bulls is that it hasn't gained momentum on the way down. We're pretty much where we were. We started the show at 11. We've been ranging there and trying to form some sort of a base out there. So 18,776, that's where some of the buyers seem to be coming in. On the upside, apart from L&T, some other stocks where there's traction is Titan. And again, from the Tata Group, even a TCS for that matter. Remember, TCS was the only Nifty stock that was really down on Friday because of that deal cancellation. But since then, it seems to be finding stable ground. It was down 1.25% on Friday. It's up about 0.5% today. And that's Titan, the other Tata Group stock. So those two stand out in terms of the upside moves today. Well, speaking of moves, it's time to get our market conversation going. And our guest on the show today is Pramod Amte, Head of Institutional Equity Research from Incred Capital. Pramod, great to have you on. We were just going through your note and some of the high conviction ideas. So I just want to put out there for our viewers as well. I think the stocks that have really done very well in Incred's high conviction list are 3, Kajaria, Global Spirits and Zydus Life Sciences. These are the ones that have performed the best. They're actually not additions. They were already on the list, I think. They are the best performers in their list of high conviction ideas. The addition actually is Bharat Electronics. Let's pull up BEL as well, which also is quite the flavor of the day, courtesy all the defense buying that we're seeing. So Pramod, welcome to the show. Thank you for joining in. Let me first start with the addition stock, BEL. Tell us why you like it and what your overall view is on the defense theme, given the huge run-up, but perhaps the long runway that lies ahead.
So the reason to add up BEL is, one, there is going to be a pre-election ordering for the voting machines, which if you look at even the past records, it seems to be even in 19, it has come through. So that is one to come through before the election. Second one is a large amount of export momentum which they are gaining. Even though the management guidance is little muted for the FY24, we feel structurally there is a substantial momentum happening in the export for defense, which is not still factored in as we have seen a couple of signing deals to come through even for US and India alliance coming through. So those are the couple of 2 business triggers which we are looking at other than the relative valuation comfort in BEL to add up. Otherwise, defense broadly we are in positive territory. We like the defense as I would say as a theme. This is part of our broader investment themes of infra and capex, where the momentum continues to build up as we have seen the FY23 order inflow and the capex spend towards the sector.
Can I just ask you, apart from BEL, for which there are other triggers like you mentioned, like the EVMs, of course, in defense itself, which are the stocks which are still an add for you despite the huge rallies?
So we continue to like BDL and HAL, which are a positive momentum for our overall scheme of things in defense. And as we have seen in HAL, again, there are orders flowing through, right? So the order inflow is still substantial. The sales to order is again a substantial comfort. So the runway for momentum is clearly visible for the stocks in the defense space.
Okay, got that. Mr. Amte, thanks a lot for joining us. So again, going through your list, I'm seeing a lot of the auto names. Take us through your call there, because the names like Tata Motors, you now have a reduced rating. Take us through the rationale there. Do you think these stocks have, run up way too much already? And also, what within the auto pack still seems favorably positioned right now, even if it's the ancillary companies?
Sure. So if you look at broadly, Nifty Auto has been in the limelight for the recent month, or I would say in the last year per se. People are trying to play out broadly the peaking out of the inflation or the interest rates, one. And second one is the broad-based recovery into the sub-segments of growth, including the two-wheeler, which is a rural momentum. So that's trying to come through. What we like or what we added in the high conviction in last 3 months is Ashok Leyland and Bharat Forge. We clearly feel there is a disconnect between the investor expectations on M&HCV cycle, both for India and global markets, and hence the relative valuation is substantially favorable to them. This is even before Ashok came out and talked about its aggressive guidance for next year. Within the run-up, if you have to see, we are a little cautious on what's happening on two-wheelers. We haven't seen a complete recovery there. If it has to flow through, we would prefer to play it through the ancillary space, in which we would play out through endurance as a preferred pick in the auto hang space.
Okay, got that. So those are some of the names. I mean, in terms of the high conviction bets which have done really well, let me just go back to Kajaria. That's of course been a great performer this week. So what's the rationale there, and are you still comfortable with the valuations?
So broadly, this is again a part of our investment theme on housing, where we have seen the second largest housing orders, or I would say the construction has started in this calendar year versus the last decade. So there is a substantial momentum in terms of construction and the renovation for both. And within that space, Kajaria fits out well, where the broader theme is one is on the momentum on demand. Second one is the gas prices slowing off. That should ultimately add up. And the way the organized to unorganized continues to flow through, as we see in the GST momentum, should also be much more favorable for this sector, which gives us a comfort on Kajaria and other construction-related names in the space related to housing.
Okay, got that. Another one that I'm seeing, which is, already moved a lot in your list is Spandana Spurti. It's up, I think, 140% in the year. If you take a look at a 1 year kind of move, how much of an upside do you see on this one now from these levels?
Interestingly, our team member was there on the for a channel checks. Seems to be there is still a steam left in this space. Literally getting almost 60% of incremental demand coming from new customers in the MFI space. That gives a substantial comfort. And broadly, the theme which we are looking at to play in the NBFC or MFI space is compared to banks which are seeing the NIMs at a peak level. We have seen the NIMs to play out still in the NBFC or the MFI space. So that is a broader theme which we are looking at in the space. And with that, other than Bajaj Finance and MM Finance, we definitely like Spandana and Home First.
Okay, got that. Pramod, from an overall perspective, how are you looking at the mid-cap and the small-cap market now, given the extent of the rally? Do you still see more upsides ahead? What are you really telling clients with respect to micro-caps, small-caps?
So if you are right, there is the extent of move has been pretty swift. So if you look at, as the data points out, the FI seems to be much more inclined towards the large caps where the money is flowing through. So the domestics continue to get the inflow. So the churn is happening more for mid caps, both in the individual investors and the domestic funds. So hence we have seen the mid caps also moving through pretty sharply. Having said that, in terms of directionally for the market, we are positive. We turned positive in February. We continue to see that Nifty 50 should scale up a new high. Our official target is 20,330 for in our recent report, where we have talked about rolling forward the earnings. Within that mid cap, we would like to be much more selective through our high conviction ideas. We see there is some amount of, in terms of valuation comfort, trying to miss out. So these companies have to come through with the earnings surprise. That's where we are more choosy about the specific names which we are trying to add up here than the across the momentum which we see in case of the broader index.
Okay, so within, all of these spaces, have you found any sort of pick from the real estate pack? Because a lot of these stocks have also moved, I'm seeing sharp moves this year. So does anything within the real estate pack interest you right now?
We directly don't cover the sector as a real estate, and hence we are trying to play the proxies in the housing, including, as I said, is Kajaria is one of them, high convictions, which I have tried to mention there, and the banking space. HDFC and the Home First Finance is where our comfort lies.
All right, got that. Mr. Amte, we're going to leave it at that. But thank you so much for joining us and taking us through all of these ideas that you have as a house. Very interesting chat, and we hope to have you back on the show very soon. With that, it is time for a short break. But when we come back, we're going to talk all about the markets. We're also going to bring you excerpts from our exclusive conversation with Titan Thanera CEO Ambuj Narayan. Stay tuned.
incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the
Hey guys, welcome back. Let's get you an exclusive conversation now. My colleague Shilpa caught up with Ambuj Narayan, Chief Executive Officer of Thinera, which is Titan's Indian ethnic wear brand and its youngest business division as well. She started by asking how really growth is panning out and what they expect in the years to come. Listen in.
So last year we grew our top line by 3x, and we doubled our store count. This year again we are looking at doubling our store count again. So we're trying to look at if we can open more than 80 stores. We can be more than 80 stores by end of this fiscal. And in terms of top line, we have a target of achieving being a 1,000 crore brand by FY27.
Okay.
So that's the plan, and by FY27 we intend to have about more than 200 stores.
Right. So about 1,000 crore by FY27. Can you give me a rough indication where we're at currently, so we sort of understand what the growth trajectory is going to be like?
Well, we're not sharing that number right now. As I can tell you that we grew to 3x last year, and this year again we're looking at a 2.5x, but we will get there. So we are on course to getting to 1,000 crore by FY27.
Right, fair enough. And I wanted to understand with respect to the product portfolio also here. You started off with just saris, and now the competition in this segment, or in the Indian ethnic wear segment, is rapidly growing in India. A lot of large players also. So I just wanted to understand, what are your plans with respect to expanding the product portfolio going forward? What more can we see?
So saris will obviously remain the mainstay of our portfolio, and it contributes to almost 90% of our turnover. The other categories we are already present right now is in blouses and kurtas.
And just before we wrap up, if you just quickly give me 2-3 numbers in terms of, I know you've said it already, but just as a summary, total number of stores that you're looking at by the end of this fiscal, and total number of cities also that you would probably be present in by the end of this fiscal.
So right now we are present in 45. We have 45 stores present in 23 cities, and by end of this financial year we aim to have 80 plus stores and spread across 40 cities. In the country.
Are you profitable right now? What is the path to profitability looking like?
Well, certainly we're not looking at profitability at the moment. This is our expansion and growth phase. But at store level, we are largely there. And we are investing in the brand right now. So building a lot of brand awareness, and also because we are investing in opening stores. So we are not looking at profitability at the moment. But we do have a line of sight for profitability in the coming years.
Very, very ambitious targets there by Thinera. They're looking at becoming a 1,000 crore business by FY27, and saying that they're going to grow 2.5% in this year itself, 2.5 times in this year itself. So very strong targets over there. But before we wind up on this show, as always, let me tell you what's lined up on our very special offering, Who Moved the Market today. So we might be 100 points off the highs on the Nifty, but there's one sector, then one space that's just seeing, highs after highs every day.
Oh yeah, absolutely. I mean, if you're getting stocks that grow 100%, 200% in a year, who cares about where the index is, right? So yes, you almost guessed it, I'm guessing. It is the defense space. We are seeing such a huge surge in defense stocks. So today is just one more day, but otherwise this has been a long journey. Of course, today's excitement is ahead of Prime Minister Modi's visit to the US and deals that will likely be signed. That's HAL today. Pull up HAL over 1 year. We're talking about a 100% move on this stock. And it's not HAL alone. I mean, a lot of them, the shipbuilders, some of the smaller companies which are into very critical components, the entire space has buzzed higher. So the question is, can you still buy something in the defense space? And how should you cut up the opportunity purely from an investor's viewpoint? That's what we discussed. Deepan Mehta is going to join in. So remember, we go live on our digital channels on YouTube and on Twitter. 2 o'clock, keep your date with us. Who moved the market? We're talking defense today.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year our total production was around nearly about 834, 800. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target a very ambitious.
Nifty oscillates near its all-time high. Consumer durables and industrials lead gains, while financials and utilities drag.
Hindustan Aeronautics gains after CNBC TV18 learns that near 80% of jet engine technology will be transferred as part of its agreement with GE. The stock lifts off.
Shriram Finance sees a big share trade of over 2.6% equity worth nearly 1,400 crore rupees. The stocks rallied post the deal as the deal is seen as providing an exit to a key shareholder.
A delay in the arrival of the monsoon in key parts of the western region following cyclone Biparjoy is likely to push back sowing of kharif crops and could impact the output of key crops for the season.
Well, hello and welcome to Halftime Report. I'm Sonia Shenoy and with me is Ekta Batra as well as Mangalam Malu. Well, things are not too great in the market, but I guess that was expected. We are virtually at all-time highs, and I guess it's just a matter of time before we get there. But for today particularly, the market is under a bit of pressure. It's sulking a tad bit really, nothing alarming. The Nifty down almost about 60 odd points. But we saw this trend early morning where the Bank Nifty was not supportive of the up move at all. In fact, even now, the Bank Nifty is the one that's dragging the Nifty completely. It's down over 300 odd points. Kotak Mahindra Bank, Axis Bank, ICICI Bank are all, sort of dithering at higher levels and preventing the market from getting to those all-time highs. Give and take everything, this is a year in which the Nifty is up about 3.5% and has seen a huge performance compared to most of its global peers. So we'll take that with both hands. But for now, just I guess some time to go before all-time highs come through.
Some time to go, and it depends on what index you're looking at for the all-time high, right? If you're looking at portfolios, they'd be more than happy because the small cap index is doing extremely well. The mid cap index has already hit a record high. And while the Nifty is up around 3.5% this year, is the mid cap index which is up in double digits. So good performance. I think the street would be happy with the Nifty not hitting a record high so long as their portfolios on a daily basis, at least at the mid cap end of things, keep doing well. A bunch of stocks surging as we speak. I mean, case in point, something like a 5-star Finance up 7.5%, has been doing well. Nomura's initiating coverage, surging. We have Tanla Platforms. I don't know what's happened to that stock, and a bunch of them, in double digits. In fact, Titagarh Rail Systems is one of those stocks which has doubled in this year itself. 100% gain in 2023. So, a lot of stocks doing well.
Yes, absolutely. And you mentioned double digits. Small cap index, mid cap index up 12% on a year-to-date basis. So it's been a great year for the broader markets. And let's see, half the year is still left. Maybe they can probably exceed or build on those gains. You were talking about specific stocks, but MRPL, Gravita, eClerx, all of these stocks are seeing a lot of price and volume action on the upside. ABB, Abbott, AIG, AIA Engineering, Canfin Home, best levels that we've seen in a year for all of these stocks. Aurobindo, Ashok Leyland, Britannia, all these stocks at 52-week highs, all from different sectors, all from different indices, different market caps. So it gives you a sense in terms of the kind of interest that we've seen in our markets and continued interest. But let's focus on specific stocks now. Sources tell CNBC TV18 the General Electric HAL fighter jet engine deal will include a transfer of technology worth 80% by value. Parikshit is here to tell us more about this. Parikshit.
Well, this will really be the big ticket announcement from the Prime Minister's visit. It's been in the works for over 6 months now. Remember, in the month of February, the Indian National Security Advisor Ajit Doval has visited the United States and met Jake Sullivan, the US NSA. That was the first time there was talk about a GE deal for co-production with an Indian counterpart. We believe this has now been cleared at the highest political level by both sides. Now, what will this entail? This will entail co-production of the GE jet engine, which will power our fighter aircraft, including the Tejas program for the future. All of this will be manufactured here in India. Koraput, which is HAL's engine unit, is being considered as one of the locations. What will be the kind of technology transfer we're getting? We're told that we have been able to get a substantial deal from the United States in terms of tech transfer. We will get up to 80% technology transfer over the next 3 years. Our sources tell us that after the signing of the deal, India and US will begin the process of getting the manufacturing equipment. Essentially, HAL will start buying the equipment needed in the engine production factory. All of this will be procured from GE. The manufacturing and the tech transfer will happen in phases. So
by the end of 3 years, this is what we've been told, that 80% of the value addition to the jet engine will happen in India. So the defense industry, the government saying that this is absolutely unprecedented, be it the United States, UK or France, none of them have this kind of a relationship or technology transfer of this magnitude. We're also told by our sources of the defense industry, and that's why we will see a positive impact on many defense stocks as well, because the government believes that 600 to 700 Indian MSMEs could benefit from the jet engine supply chain over the next 3 years. So all in all, a good deal. At the same time, we're learning that many enabling mechanisms, such as mechanisms to guarantee procurements of parts from the United States, reciprocal procurement of defense components, those agreements will also be signed to make sure that there is no kind of loophole, regulatory hurdle or import-export hurdle when it comes to transfer of components when we need them in times of crisis.
All right, we will be discussing more on the defense space on our special offering on YouTube, Who Moved the Market, coming up in a while from now at 2 p.m. on our YouTube channel. Okay, but Larsen & Toubro is also trading in the green after securing a deal to construct over 135 kilometers of the Mumbai-Ahmedabad high-speed rail worth over 16,000 crore rupees. MSCI has upgraded its rating, while brokerage firm Macquarie is bullish on the company as well. Vivek joins in to tell us more on that. Vivek, over to you.
Well, that's right. Two important pieces of development as far as L&T is concerned. Number one, the company has been declared as the lowest bidder, or is now at the L1 status. Now, this is to construct almost over 135 kilometers for the Mumbai-Ahmedabad high-speed railway network. Now, remember, the company is L1 in the package C3. That is the third installment of the 508-kilometer mega Mumbai-Ahmedabad bullet train project. Now, so L&T's bid came in lowest, and it was a little over 15,697 crore. What Macquarie is saying is that, this is a very big positive given the recent narrow misses that the company saw as far as the few large order tendering activity was concerned. So Q1 FY24 order inflows very strong, coming in at close to 26,500 crore rupees, up almost 45% on a year-on-year basis. Remember, the FY24 order inflow guidance given by the company is between 12 to 14%. So Q1 is actually proving to be quite strong for the company. Now, additionally, what we are tracking is the fact that MSCI has gone ahead and upgraded the company's ESG rating to a double B from an earlier single B stance that they actually had earlier. Now, what Macquarie believes is that MSCI upgrading the ESG status actually helps alleviate another key concern as far as investors were concerned on L&T's defense exposure was concerned. Now, just to give some background, the MSCI ESG rating actually helps investors to go ahead and make investment decisions, especially given they actually have a certain amount of bias against stocks that are present in certain industries, defense being one amongst them.
All right, Vivek, thanks a lot for that. That explains why L&T is doing well, though mildly off highs, but still sitting with a gain of almost 1%. Nykaa is the other one which I'm tracking. Remember, the stock was a big gainer on Friday as well as the annual analyst meet was underway. The company targeted, strong growth in their total addressable market and growth across all their verticals. Now we have some brokerage notes coming by as well post that analyst day, and as a result of which the stock following up with a gain of almost 3% today too. We have Jefferies note, they have a buy rating on the stock with a target price of 200 rupees. They believe that management sounded positive on the industry outlook and Nykaa's right to win across business verticals that they operate in. The premiumization trend actually plays well in favor of Nykaa given the platform's positioning, and a strong tech backbone is something that they are watching out for too. Nomura is a buyer as well. They believe that the online beauty and personal care business and the fashion care business in India could actually grow 27 to 29% over the next few years, and Nykaa will grow ahead of the market. And the stock currently, given the management's guidance, trades at 5.1 times 2-year forward EV to sales, which is attractive at current levels. The underperform rating comes in from Macquarie, which is still circumspect, even though they like the focus on driving market-leading gross merchandise value growth. They have a target price of 115 odd rupees. They say that the company in their analyst day was evasive on losses in their fashion and beauty distribution, and they believe there is no tangible medium-term growth or profitability target that the company had spelled out, and concerns of competition is something that they'll be watching out for too. So there are two notes which are bullish on the prospects. One is slightly circumspect because of the competition and lack of growth target.
Okay, so competition continues to be a key concern for the likes of Nykaa. Definitely one space to watch.
Yes.
But nonetheless, let's shift focus from consumer to metals. JSPL is surging in trade. This is post an upgrade which has come in from the brokerage, Kotak Institutional Equities. Sonia is tracking this story. Sonia, the stock is up 5%.
Oh, absolutely. And you know, a lot of positives that Kotak Securities speaks about. First up, of course, they have upgraded JSPL to a buy from a reduce. They say it's their top pick in the sector. They've raised their target price to 740, which is a big upside to the current market price. They expect almost a 30% upside to the current market price. Now, they talk about how the next 12 months is a transformational period for JSPL, where a lot of projects are lined up for commissioning in the next 12 to 18 months. And the capacity would also go up, but the capacity would not go up at the cost of the balance sheet. So they're saying that they will do a lot of these expenses through their internal accruals itself, and their net debt to EBITDA will peak at just about 0.8 times in FY25. But here's the clincher. They see a potential 100% return in the next 3 years on March 2027 basis in JSPL, and hence the stock is up and about. Now, JSPL has a number of competitive advantages if you look at it. One is backward integration in both their steel and their power businesses. They have their own coal mines, iron ore mines, power plants, etc. They have large scale of operations. They have a strong brand name and technology leadership as well. All of this put together is a strong moat for the business to grow. In the last 1 month, the stock is up about 10%, but the expectation is that, the stock will move much higher from here.
Okay, all right, Sonia, thanks very much for that. So that's on JSPL. The stock is doing well in today's trading session with a whole host of other stocks which are in the green as well, despite the index being in the red. We have the Nifty, which is down around 40 odd points. Bank Nifty, which is reeling more under pressure. It's down close to over 260 odd points as we speak for the Bank Nifty. Time for a short break, but on the other side, we'll put the focus on a lot more stocks which are gaining on the back of news flow. Stay tuned.
Incredible. Obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it.
Welcome back to Halftime Report on CNBC TV18. Well, for now, the market, the update is that although the frontliners are not doing that great, the mid-cap index is really the one that's outperforming quite a bit. In fact, Ashok Leyland is one stock that we're looking at this afternoon. The stock is at a fresh 52-week high. We, of course, covered this on Friday as well after the analyst meet that Ashok Leyland had. But just a couple of more points. Ashok Leyland is now up 20% for this year. And there are two main reasons for the rally. One is the improvement that we've seen in the commercial vehicle space, where most industry experts are talking about a 10 to 12% growth that the CV industry will see in FY24. Apart from that is the export push that a lot of these CV companies are noticing. So there's an increased focus on exports for Ashok Leyland as well. They spoke about how they will be doubling their export volumes in the next 2 years. If you look at a lot of brokerages, they have target prices of anywhere between 180 to about 185, ICICI Securities, MK and Motilal Oswal. If you compare the company with its peers, if you look at a 5-year revenue compounded growth, Ashok Leyland has grown at about 5%, while Tata Motors at 6.5% and Eicher Motors at 12.5%. Now, the reason why Eicher Motors has outperformed is because of the company's focus on the premium truck segment, which has grown at a faster pace. But apart from that, in terms of a stock price, Ashok Leyland has had a smooth run up almost about 20% in this year and at a fresh 52-week high currently.
Okay, all right. So that's an Ashok Leyland. Sonia, stock at fresh 52-week high. We've been talking about how all the auto stocks have been really the big momentumizers for this year. But let's focus on some more stock-specific action, this time from the NBFC space. Shriram Finance is surging in trade post what was a large open block deal that took place. Dinesh is here with the details on who the likely seller was in this.
The fact is that there was a large block, and looks to me that TPG was a seller in today's block deal. The stock has reacted sharply because the buyers apparently are strong names, is what I understand. The block happened in the block window, so there was no leakage as well. And it's a clean out trade as far as TPG is concerned. So the entire 2.6% which TPG used to hold has been sold now. So that's been done. The other important thing to track going forward would be the other large holder, which is Piramal Enterprises. They own 8.3% stake in Shriram Finance, and there could be the next potential large sellers. So that's something to track going forward. But in today's block, I understand TPG was a seller and some marquee names have bought. In fact, the management just spoke to us a few days back, and they were quite bullish on the business going forward. So they expect a 10% growth overall in FY24 to continue. They expect a 10 to 20% growth in the two-wheeler segment and 10 to 15% growth in the farm equipment segment. So the businesses are good, the levers are in place. Now that the big overhang from TPG is out of the way, the stock has reacted sharply, and I understand some marquee names were buyers in today's block deal.
All right, marquee names, buyers, the selling overhang gone. That explains the stock up around 4% odd. But another stock which is higher in today's trading session, a strong 7% move is 5-Star Business Finance. This is as Nomura initiated coverage on the stock. In fact, at the high point of trade, Surabhi Sutaria joins in with details of that one. Surabhi.
That's right. So Nomura has initiated coverage on 5-Star Finance with a target price of 750. They say that the company is highly profitable and amongst the fastest growing NBFC in a very niche market. They estimate the company to deliver a 30% AUM compounded growth in the next 3 financial years. It is going to be driven by significant untapped opportunity in the MSME market, specifically in the niche small business loans where the ticket size is less than 10 lakhs. They also see continuous expansion as a growth lever. They say with 50 to 60 new branches expected to open every year, the growth is the growth is going to come in the next 3 years for the company.
Okay, all right, Surabhi, thanks very much for that. That is a thumbs up, 5-star for 5-Star Finance today.
But that's not the only NBFC in focus, right? We have a bunch of other ones.
Absolutely, I'm tracking a whole host of NBFCs today. I'm going to start with JP Morgan, and there are a lot of brokerages which are bullish on NBFCs. JP Morgan, I'll start with that. Perennial boom-bust cycle of NBFCs, according to them, is again recovering and may last for the next 4 to 5 odd years. Both domestic and foreign investors suggest under allocation to this segment at this point in time. There is scope to add beta and portfolios via NBFCs. Bajaj Finance, L&T Finance remain their top picks. That is basically JP Morgan. Now, Morgan Stanley says in the large cap quality group, key picks are Bajaj Finance, SBI Cards, Manappuram, PNB Housing, Shriram Finance can give outsized returns according to them. Outsized returns are likely in high quality insurance names as well. So they like SBI Life, HDFC Life, ICICI Pru. And lastly, HSBC. It's written on a whole host of NBFCs. Strong EPS growth cycle continues. They believe they can outperform. They've upgraded M&M Finance from hold to buy, raised the target price there. We have a buy on Bajaj Finance, Chola, LIC, all of them, L&T Finance, SBI cards, and they've raised the target price on all of these counters.
Okay, thanks a lot for that. So the NBFC space is looking pretty good. But Titagarh Rail Systems is also the other stock we're looking at. Antique has initiated a coverage with a buy rating. Mangalam, tell us more.
That's correct, so Titagarh Rail Systems, which was the erstwhile Titagarh Wagons, we've been tracking it very closely. Over the last 1 year or so, the stock has rallied almost 350% in 2023 itself. The stock is up 100% at 450 right now. But Antique believes that there is a lot more on the way up. They've initiated coverage. I'm not sure whether it's a little late in the day after a 350% rally in the last 12 months or so. But the fact is they believe that it could go all the way up to closer to 700 rupees. And that's why they have a buy rating. They believe that the earnings of the company could actually compound by almost 50% plus over FY23 to FY26. They expect an average return on equity of over 25% as well over the next 3 years. And the stock, despite having meaningfully appreciated, remember the profits had doubled at 12 times FY25 earnings. The stock is cheap and still, despite the run-up, does not capture the long-term growth potential that they have in terms of a bunch of orders that they've gotten, but more importantly, the potential of orders that are there as well with, the Vande Bharat trains and all of that. We've spoken to the management time and again. They've also spoken about the potential of orders here, them having the capacity to execute that. Antique believes that all of that should be a little more than the 12 times that this stock is trading at.
Okay, all right. Big moves coming in over there. Let's do one thing. Let's take a quick break. For the market, it's very, very quiet. The needle hasn't moved at all in the last 1 hour. So when we come back, we'll get you some trading strategies. We have Ruchit Jain of 5paisa.com who will be joining in just a bit. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind. And I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the
Welcome back. Well, the market hasn't done much in the last 20 minutes or so. Remember, we've seen the Nifty fall a little from the highs, a bit of a tease, so to say, from the record high, because we just take a look at the opening of the Nifty today, the high in today's trading session and the record high, less than 10 points, almost 7-8 points. The high today on the Nifty was 18,881.5 and the record high on the Nifty is 18,887.6. So just about 7-8 points difference between today's high and all-time high. So we were so close, but yet so far from where we are right now. And that's largely because of profit taking. The Nifty bank is the culprit. It's fallen below the 20-day moving average of 43,987. It's been meandering between 20 and 50-day moving averages for the last few trading sessions. So let's see how that pans out. For any meaningful recovery on the Nifty, we need to watch out for the Nifty Bank itself. But the mid-cap index, no problems out there. That index hit a fresh record high today. And that's telling you that, when the mid-caps move well, means that the lower end on the frontline indices have been protected, and which is what gives the freedom to mid-caps to go ahead and rally a little more as well. So to that extent, we are seeing a fair amount of put writing and some call writing as well. So call writers are active at 18,900 and 18,800, telling you that maybe just a little while that we have to wait before we hit a fresh record high. The 18,700 put writers were caught on the wrong side, and rather 18,800 put writers were caught on the wrong side, and they had to unwind some of their positions. 18,700 put writers too, unwinding some of their positions, but no real problems out there. The market is seeing support between 18,650 to 18,700 for the Nifty. India Bulls Housing Finance and IEX are the two stocks that I'm watching out for. They may exit F&O ban. Chances are the price move in IEX is telling you that it may exit F&O ban today itself, as against India Bulls Housing Finance, which is relatively flatter as compared to IEX.
Okay, all right, Mangalam, lots of stocks in focus there. Richard Jain joins in of 5 Paise, joining in to discuss all what he's tracking today. Richard, it's the start of the week. We just about are in kissing distance of those all-time highs for the Nifty, but a lot of stocks are doing well. So what are you telling your clients? How do you play, one, the index, and two, stocks?
Yeah, hi, very good afternoon to both of you. Well, as far as index trade is concerned, I think it's clear that last 2.5 months, the market trend has been positive. And there's a rising channel in which the Nifty has traded, and the market has not, the index has not yet breached that channel. Now that support end for that channel is coming around last Thursday's low, which was 18,670. And the 20 days EMA, which has not been breached since last 2.5 months on Nifty, is coming around 18,580. So till these supports are intact, I think one should rather continue to trade with the trend. So we are advising our clients to continue trading with a positive bias. Now, definitely market is testing the patience to test that all-time high level, which today got missed by just 8 or 9 points. But as of now, there are no signs of reversal on the index. So better to stay with the trend on the high side, 19,000, 19,100. Once this all-time high is tested, I think that would be the next level to watch out for. As far as Bank Nifty is concerned, I think some consolidation phase it has entered into, which could be just a time-wise correction within an uptrend. And once this time-wise corrective phase gets over, I think we should see a positive momentum resume in the banking space too. So our biasness is still positive until this support gets breached. Now, a couple of stock recommendations, since the broader markets have also been doing positive. First would be a buy call from the NBFC space, which is Muthoot Finance. A gradual high top, high bottom pullback move of late has also been supported by rising volumes, which is a good sign. So we expect some good outperformance from the NBFC space in the near term. So Muthoot Finance can be bought at current levels also with stock below 1120 for potential short-term targets around 1300. And Abbott is the second stock on which we have buy call today. So primarily, again, this is one of the stock which has been forming a high top, high bottom structure today. In fact, previous swing highs has been crossed with no rising volume. So currently around 23,000, 23,200 range. One should look to buy this for near term with stop loss below 22,700 for potential targets around 24,000.
Okay, so that's an Abbott. Any thoughts on a couple of these CV names? I mean, we've been discussing Ashok Leyland ad nauseum. That stock is at a fresh 52-week high. More upsides there. And anything else in this space? Eicher Motors, Tata Motors that you like?
Sony, I think Ashok Leyland would stand as an outperformer going ahead, because the stock has already seen an underperformance till last month. And after forming a support around its 100-day exponential moving average, we have seen that this time the up move has been supported by quite good volumes compared to what we saw during the previous rallies. So I think a catch-up move, maybe because it has so far seen an underperformance amongst the auto space, so a catch-up move would be seen, which is likely to continue. And I think if one has a view of about next 3 to 4 months, then the stock has the potential to cross even 200 levels. So definitely the entire auto space is looking positive. But within this space, I think if one has to pick a short term, even after the current rally, then Ashok Leyland should stand out.
All right, Ruchir, thanks a lot for that. Take a short break, come back, get you more on the markets and individual stocks on the other side.
incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban.
Welcome back. Well, let's focus on some perspective then. We earlier spoke to Prashant Khemka, founder at White Oak Capital Management, and also with Nilesh Shah of Kotak AMC on their take as the markets are inching towards those fresh record highs. Listen in.
About China, I think the leadership there for geopolitical priorities has what that has meant is the economic policies have taken a back seat, and that is playing to India's advantage when India is on the front foot in terms of its economic policies. We are end of the global rate cycle, and without a massive fall off in economic activity in the world's largest economy that was anticipated, and this largest EM market, as you pointed out, competitively falling behind India, I would say in economic terms, has meant a big boost to economic activity within India portfolios. Obviously, we are fully invested as always, with largest exposure in sectors like financials and consumption. I think we always have to be watchful, but this time it doesn't seem like it is out of place compared to where the rest of the market is. Remember, prior 12 months, if you see, so as you rightly pointed out, this uplift in mid and small and micro caps is largely 2-3 months old. If you look at last year, 22, these segments had underperformed large caps. Not by a huge lot, but they had underperformed nonetheless. So there's been some time correction in this area.
It's a fairly priced market, neutral market, and one will have to be careful in picking up stocks at this point of time. The euphoria about India today is now with the FPIs. They were on exodus mood between October 21 to June 22, selling about $35 billion. And now they are buying back the same stocks at a higher prices. The local investors have been buying equity on a regular basis. By and large, they have been coming via mutual funds, right, rather than going directly into the market. By and large, they are focused on quality. So overall, retail investors have matured a lot. This is not to say that everything is hunky-dory in India. Even today, 89% of retail investors who are going to trading in FNO end up on the losing side. Do your SIP in mutual fund and participate in India growth story.
All right, do your SIPs and participate in the India growth story. That's the word coming in from Nilesh Shah. Let's slip into a quick break on that note. On the other side of the break, lots more coming up on the markets. Do stay with us.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind. And I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now. And we will see how and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of
Welcome back to Halftime Report on CNBC TV18. Let's get you an exclusive conversation. Our colleague Shilpa Ranipeta caught up with Ambuj Narayan, who's the Chief Executive Officer of Taneira, which is Titan's Indian ethnic wear brand and its youngest business division, and started off by asking him how growth is panning out. Listen in.
So last year we grew our top line by 3x, and we doubled our store count. This year again we are looking at doubling our store count again. So we're trying to look at if we can open more than 80 stores. We can be more than 80 stores by end of this fiscal. And in terms of top line, we have a target of achieving being a 1,000 crore brand by FY27.
Okay.
So that's the plan, and by FY27 we intend to have about more than 200 stores.
Right. So about 1,000 crore by FY27. Can you give me a rough indication where we're at currently, so we sort of understand what the growth trajectory is going to be like?
Well, we're not sharing that number right now. As I can tell you that we grew to 3x last year, and this year again we're looking at a 2.5x. But we will get there. So we are on course to getting to 1,000 crore by FY27.
Right, fair enough. And I wanted to understand with respect to the product portfolio also here. You started off with just saris, and now the competition in this segment, or in the Indian ethnic wear segment, is rapidly growing in India. A lot of large players also. So I just wanted to understand, what are your plans with respect to expanding the product portfolio going forward? What more can we see?
So saris will obviously remain the mainstay of our portfolio, and it contributes to almost 90% of our turnover. The other categories we're already present right now is in blouses and kurtas.
And just before we wrap up, if you just quickly give me 2-3 numbers in terms of, I know you've said it already, but just as a summary, total number of stores that you're looking at by the end of this fiscal, and total number of cities also that you would probably be present in by the end of this fiscal.
So right now we are at present in 45, we have 45 stores present in 23 cities, and by end of this financial year we aim to have 80 plus stores and spread across 40 cities. In the country.
Are you profitable right now? What is the path to profitability looking like?
Well, certainly we are not looking at profitability at the moment. This is our expansion and growth phase. But at store level, we are largely there, and we are investing in the brand right now. So building a lot of brand awareness, and also because we are investing in opening stores. So we are not looking at profitability at the moment, but we do have a line of sight for profitability in the coming years.
All right, so that's about Taneira, looking at 1,000 crores revenue coming in from FY27, and that will be an important vertical of growth for Titan going forward, as well as they have, diversified into revenue streams, starting out as a watch company, getting into jewelry, and now slowly ethnic wear as well. But let's talk about the monsoons. The monsoon advancement has been stalled in Maharashtra, owing to weak westerly and southwesterly winds. The IMD, the Met Department that is, says that the monsoon had reached close to Ratnagiri. However, the winds are not strong enough to pull rain towards the North Konkan and Mumbai regions. The current spells of rain that we're witnessing are occurring only due to cyclone Biparjoy, the Met official department say. Earlier today, we spoke with Mahesh Palawat of SkyMet, and he says that they expect monsoon to reach Maharashtra in the next 3 to 4 days at least. They also expect rains to be satisfactory till the first 10 days of July. So all those who are keeping an eye on the sky, looking for the rains, maybe there could be some relief coming in over the next 3 to 4 days. Let's listen into the comments coming in from SkyMet.
Winds, lower level winds will get strengthened over west coast of Maharashtra, particularly Maharashtra coast and South Gujarat coast by 23rd of June. So we have to wait for another 3 to 4 days for monsoon to reach Maharashtra, and thereafter there will be steady progress in interior parts as well. The rainfall will start increasing in the month of July, but as the monsoon this year was weak, onset was weak, and cyclone has pulled the moisture away. That's why the onset of monsoon is delayed, but now the rains will be satisfactory until first 10 days of July at least. The Kharif sowing is delayed by say 10 to 15 days, but now the things are looking very bright. We have to wait another 3 to 4 days at least. Predicted monsoon to be 94% of long period average, that is below normal, and it seems to be like this. Although rainfall will be good, because until now the monsoon has not progressed as per norms.
Okay, well, hopefully we're waiting for a pickup in the monsoon, but let's shift gears now and let's tell you what we have lined up today on our special offering on YouTube, Who Moved the Market. Surbi's at the wall to tell us what she's tracking and what's on her radar today. Surbi.
Hi guys. Well, I thought of this in the morning. The market has been in such a buoyant mood in general, despite the slight profit taking that we're seeing today. It's really defense, and I think this week is going to be all about Prime Minister Modi's visit to the US, and that's showing up in stock prices. We're seeing gains between 2% and 4% in some of them. So I thought, why not, take this up in a slightly more deeper manner. Just look at the kind of stock price action we've seen on these stocks. From 300% on some of the names like Cochin Shipyard and Mazagon Dock to 80, 40, 50% on some of the smaller names like MTAR and BEL. So I don't think anybody is denying the opportunity and the possibilities that exist out there. But from an investor's point of view, the issue is, what stock do you buy after such a huge run-up? I will be asking exactly this to Deepan Mehta. So keep your date with us. 2 o'clock, we're live on our digital platforms. Catch us on YouTube and on Twitter. See you there.
Incredible. Obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
Big surges what we're seeing in a couple of these pharmaceutical names from the broader market. Strides Pharma, for instance, is up 5%, and most of the gains have come by in just the last half an hour or so. It was doing well, up around 2% until half an hour ago, and now it's up around 5%. So it's extended its pop. The other one that's following suit is Biocon. That too has moved to the high point of trade. For most part today, it was trading mildly in the red. So by virtue of gains, it's just about 0.5%. But the spike is noticeable. AB Fashion and Retail, after being an underperformer this year, down almost 25%, we are seeing some bit of signs of life on that stock. It's up around 2.5% today, but for the month, it's up around 6.5 odd percent. So maybe the street will at some point start looking at the diversification that the company is doing in terms of value accretion. L&T Tech Services doing well. Today has been a decent day for some of these mid-cap IT names as well. So L&T Tech Services is something I'm watching out for. And finally, IEX, which again, while it's moved to the high point of trade, remember it's very close to coming out of F&O ban. So maybe someone on the street is betting on its exit from the F&O ban today itself. But as promised, let's go across to Manisha, who has brought with her all the things with regards to commodities.
Thank you so much for that. I also have a very special guest with me, Mr. Siraj Hussain. He's a former agricultural secretary, also joining us on the phone line. Mr. Hussain, thank you so much for joining us. And we were talking to IMD earlier in the day, and we do understand that there is 37% of deficiency as far as monsoon goes until time in India, and 37% deficiency also because we'll finally seen some cyclone rainfall coming in, so the number has been lesser there. But look at Maharashtra, and we're looking at nearly 85% of deficiency here. Other states like MP has a 93% deficiency, Telangana 82% deficiency. How are you reading these numbers, and are you concerned? Because it's already almost 20th of June, and we are working with big deficiencies in sense of rainfall.
These numbers are quite at odds with the monsoon prediction of IMD. But I think we should have expected that due to the impact of El Nino, the monsoon rains may be deficient. So I think advisories have already gone to farmers in various states to wait for the monsoon rains and not plant their crops, because otherwise they end up losing the money on seeds.
Okay, well, of course, there is a huge deficiency coming in there. Just to reiterate those numbers, and what we spoke to IMD earlier was that Maharashtra clearly has 86% of a deficiency, with MP standing at 93%, Telangana at around 82%. And while, of course, monsoon is expected to progress in the next 2 to 3 days, there is an expectation that the first half of July actually could be on the positive side.
Correct. Manisha, in fact, a bunch of things are happening with regards to the monsoons, though SkyMet and IMD, both of them believe that maybe it's because of Biparjoy that we're seeing a bit of a delay in the monsoons. The monsoons had come as close to Konkan, and it was after that where we saw the winds, and there was a mild delay. While we try to repatch the connection with Siraj Hussain, your thoughts on whether this could have an impact on the agricultural output, and will that then in turn make things a little more expensive?
Oh, well, absolutely. At this point in time, we are nearly 10 to 15 days later as far as sowing is concerned. And the numbers really could pick up. By the end of June or the first week of July, you could be looking at stronger numbers as compared to previous year. But the fact being that the late sowing will lead to perhaps lower yield and quality, and that clearly is a bigger concern. And then usually El Nino, when it comes in by the month of September, and October is when we see that peak coming in. And that would be the second half of the monsoon, with first half of June already being washed off, in sense that you haven't seen rainfall at all coming in Maharashtra. Mumbai clearly has been dry for the longest time. It has been quite hot here. So that clearly could be a concern. Mr. Hussain, what is your sense? What is your concern? I mean, do you think yield is something that we should be watching out for right now?
Are you asking me, Manisha?
Yes, Mr. Hussain.
Okay.
Actually, it is concerning, especially because the IMD had forecast a normal monsoon. But I think the farmers would have realized, would have known by now that due to the impact of El Nino, they cannot expect normal behavior of rainfall. So I think in most of the states, the farmers would not have planted their kharif crop, and that is why you see a lower number. So they would be waiting for the normal monsoon rains to resume to whatever extent, and then only they will plant their crop. So it is concerning, but not too much, because June does not get too much of rain in most parts of India. If from now onwards the rainfall resumes its normal pattern, we would be rather fine.
Clearly. And Mr. Hussain, because this is lower monsoon that we've seen in Maharashtra, Madhya Maharashtra also hasn't received any rainfall. MP minus 93, UP is not so great as well. So the central India, which is clearly 50 to 70% of the crops sown in Kharif, what crops would you keep an eye on?
Actually, in many regions, there is irrigation available. So those regions will be able to plant their Kharif crop, even if it is a little late. But of course, the monsoon does not reach UP by this time. It will come here. Normally, it reaches here only in July. So in UP, if the rainfall is lower, that is not a real cause of worry. Similarly for Punjab and Haryana, etc.
Okay. When you look at the overall numbers, and I am sure these are still early days to look at these, but rice is down 14%, pulses 57%, oilseed minus 14%. Would you read too much in these numbers, or would you rather take cognizance of them by the first week of July?
The thing is that the farmers who have taken the gamble of sowing their crops, knowing very well that monsoon rains are going to be deficient and monsoon is delayed, they will end up suffering because their seed may not grow, and then they may have to plant it again. So it results in a loss of income for them, and that is how they get more indebted. But otherwise, from the point of view of the overall production of Kharif, even now we can catch up if the monsoon rains resume and if the pattern nears the normal pattern.
Mr. Hussain, just going to the global, a wider, broader outlook into this as well. And we've seen global commodity prices gain up. The grain deal is something that the street is eyeing at. El Nino is another reason here. The soft commodity prices, and the Indian government has been taking a lot of stands, whether it has been about stock limits, announcing your holdings onto the portal, the duty structure as well for the oil seeds being changed. How are you looking at various these measures?
Actually, the inflation management of the government has been quite good. And I wrote a piece in Money Control the other day in which I said that many a times the ban or restriction on export and lowering of import duty reduces the domestic prices, reduces the inflationary trend in the economy, but it also harms the farmers, because then many a times, as we are watching in case of chana and mustard, the prices rule below MSP. So ideally, the government should be protecting the MSP by the duty structure, so that the farmers also realize a fair price and the consumers also do not suffer too much for inflation.
All right, that's important points that you're making with regards to inflation and the kind of impact that rain could have. Manisha, thank you so much for that as well. In fact, the fact that so far there has not been enough rains and the second half could be impacted by El Nino may cast some concerns on consumption as well, and which is why we're seeing some impact on rural-focused consumer companies as well. Colgate, for instance, has moved to the low point of trade. Nestle, which has more of an urban focus too, is currently seeing some profit taking at the low point of trade. In fact, the FMCG index itself should come up for you on the screen, and it'll tell you that there is some bit of concerns with regards to demand. The FMCG index at the low point. With that, we're out of time on this edition of Halftime Report. Business Lunch comes up right up ahead.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment, because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind. And I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now.